Dondi and Sandra, thank y'all so much for doing this.
Oh, you're welcome. Thank you for thinking of us.
And my name is Scott and Coleman, and I get to work with a lot of the church planters and such, and so they especially are brand new to a lot of this, so I really appreciate what y'all are going to be doing. And we have a lot that are bivocational, so we talked to them. We had I don't know, almost 40 on the line on Saturday because they can't come during the week. But if it's okay with you guys, we'll record this and make it available to them. Is that okay?
I'm okay with that.
Okay.
Sandra? Yeah, she's nodding. Okay.
Okay.
You're still on mute.
No, I'm not.
No, you're not.
That's what old men do, not you young guys.
Well, and if you don't mind, if we can get a copy of the recording as well, because we've been training some of our staff accountants, and I think some of the stuff we're going to hit on today, I know the second session Sandra's hit on with them recently, but just the kind of general overall we're going to hit here in the first session would be great training for them.
Excellent. And so we'll probably just make it, what we've done in the past is just put these things as a YouTube thing on our webpage. So if that's okay, we'll just do that. Okay.
I'm okay with that. Are you, Sandra?
Yeah.
I was like, you're speaking more than me. I just kind of look like I'm
I'll just make sure not
trying
to
to
go
get my lighting figured out.
And what about sharing screens? Do you guys need to be able to share screen on anything?
Yeah, we have a couple of PowerPoints, so if we're able to share, that'd be great.
Okay. And both of you, or who share? Maybe I think maybe I can make both of you a co-host if that helps. Let's see here. Do you want to make Sandra a co-host? Yes. And then co-host Dondi. Okay. Is y'all's share screen button down there now?
Yes.
Yes.
It's green and shiny. It's easy to find.
Perfect.
I'm going to try it real quick just to see because
Sure.
I've not done it before. Let's see.
Excellent. Yeah.
Is that you, Sandra? Nope, it's me.
That's yours.
I've never had to do PowerPoint on Zoom before.
Yeah. It's pretty cool.
Okay. It's not moving with my arrows, Sandra. It's moving with my mouse.
Okay.
So I don't.
So Dondi will do.
I'll stop sharing if you want to play with it. It looks like people are starting to arrive.
Yeah, I think we'll. So we originally planned to have a little bit of a break, like 10:20, 10:30,
Okay.
before the second session. And so at that point, I will be sharing the second session probably. That's the initial plan. Dondi's going to control the first one, and I'll control the second one. Once we get there. So I should have 10 or 15 minutes to look at that and play with that a little bit then, I think.
Yeah.
And Sandra, you're a little echoey. Is your microphone near you? I mean, it's definitely understandable, but is it just built into your computer?
Yeah, I think we had issues with this before, but.
You are too, though. Scott, you're very echoey too.
Oh, okay.
Well, then it's not just me. I'm okay then.
Okay. It's great. Yeah, it's fine.
I guess you're not speaking as much as they will be.
Right, and I could move to, actually have two screens on here because I wanted to be able to see what it looks like on, I'm recording on one and then want to be able to actually use it on the other, so.
Well, and I'll try to mute myself when Dondi's talking, and that may help some too.
So what that does tell me though, is that I should probably use this microphone. What if I mute that one?
Scott, you have the ability to be able to mute everybody, right? So when one of the speakers is talking, it would be best if they are muted.
So is the sound better on this one? It is?
I think it is.
Okay.
I didn't hear the echo the first time, so.
Okay.
Yeah, I'm not hearing any echoes, but this mic is clearer than the other one was.
Okay, great. Then you know what I think I'll do? Okay, great. So I'll when I speak, I'll use this one. Okay. Okay. And let's see, Sandra, did you try the sharing screen? You want to try and make sure it's working for you?
works officially. I'm not quite in there ready yet, but same thing. Y'all can see that fine?
Yeah, I can see it.
Okay, yeah, that's great. And what we have noticed is people tend to, there may be a few at the beginning, but people tend to sign on in the first 5 minutes. So
Yeah.
no need to for us to wait too long with it, but we can.
I'm done. I'm good.
Okay, now Scott, you're going to first start out just welcoming people and then
Yeah,
the ladies.
that sounds good. Okay, let's see. Well, there's 3 folks in the waiting room right now, I guess. So are y'all ready? We could let them in. We could just kind of talk a little bit. Is that good with y'all?
I'm good.
Okay. Oh, there we go. There's a bunch, yeah. Welcome, everybody. We are hanging out for a few minutes before we actually start, but glad to see everybody here. Hey, Donna. I see a face I recognize. Oh, Brother Jefferson, glad you're with us. Marianne Farish, what church are you with, Marianne? I lip read Baptist, but you're on mute. You want to?
Sorry, Lake Highlands Baptist.
Oh yeah, great church. With an old pastor now, you've got a new pastor.
With
Yeah.
an old associate pastor.
An old associate pastor, yeah. That's great. Oh, here's some. Dan Jackman, what church are you with, Brother Jackman? I see Tedrick. Hey, Tedrick. I'm sure. Hey, there you are. Are you in Dallas or Austin?
I'm here in Austin, trying to finish up some state work.
All right, man. Staying on top of all things financial for the state as well. Yeah.
Yes, sir.
Glad to have you with us.
All right, thank you.
Let's see. We'll start. We're still a little bit early. Just reminding you guys. I'm sure you're all old-time Zoomers by this point, but remember you can change the view up in the top right where it says Speaker View, or you can go down to Gallery View, and they'll be sharing a screen in a minute and showing your whole screen. But if you want to see just the person talking, you can change the view up there. Okay. All right. Well, there may be a few more signing in, but I see now that it is straight up 9 o'clock, and we will be recording this. And so if you need to refer to it later, you can certainly do that. It usually takes a day or two for our tech guys who know how to edit it right and get it uploaded just right to put it on the webpage. But our great presenters have said that that would be okay. And so if there's something that you missed, you can kind of go back. Or if there's somebody else in your church that could use this, or maybe you need it at a different time, for whatever reason, it will be online a little bit later this week. So let me just say welcome to the DBA Tax Seminar. We have often done this in the month of February in the past here in person. And it is great to be able to do it via Zoom. There's a lot of really good positives to that too, that y'all are able to be wherever you are, at your home or at your church, and that we'll be able to share it to a wider audience later. So we we are not, we want to be sure that we're doing everything completely above board. That's one of the things that the Bible tells us, is to, do what the authorities ask and make sure we're doing everything right. It proves that we're doing things in moral ways and ethical ways. It's a good testimony, not only just good business practice, but also a good testimony to our churches and to our communities, that our churches are doing things right. So I really appreciate you guys taking all that so seriously. So welcome to our seminar. I'm going to introduce you to Tammy Dish. Tammy Dish works with all of our things financial here at DBA, and she has been the one who has graciously set this up. So let me just pray for us, and then Tammy, I'll turn it to you to say whatever you'd like, and then you can introduce our speakers. Let's pray. Father, you are so good to us in so many ways, and we just seek to follow you, and we seek to be good testimonies of you. We seek to be good stewards of the funds and of the people that you put into our lives. And so in this very important manner today, Father, we pray that you would show us how we can be good witnesses, and how we can do things in efficient but correct ways as well. So we thank you for people who have made this their life work. And I thank you for those in our churches that seek to keep us completely in line as well. So may you guide our thinking. May you help us as we learn today, and even show us specific areas where we can apply this to our churches and to how we do things there. So we pray all of this in your Son's name, and ultimately for his glory. In Jesus' name, amen. Okay, Tammy.
I'm so glad all of you are here today. It's my privilege to get to announce to you or introduce to you our two speakers, Dondi Hayhurst and Sandra Fowler from Ratliff and Associates. Ratliff and Associates is our accounting firm, and they work kind of together on some things. But Somerville and Associates is the firm that they work with. They're located in Arlington, and they have assisted us before. I think, honestly, I got to know Sandra and Dondi through going to their seminar that they do, the Ultimate Financial and Legal Conference they do usually in the fall. And they're very, very knowledgeable about many of the matters that we're going to talk about today, or all of the matters that we're going to talk about today. And let me just tell you a little bit about them.
Tammy, you muted yourself.
Mm-hmm.
I'm so sorry. I'm so sorry. I don't know how much you missed of what I said, but let me just introduce you all about Sandra Fowler. Sandra Fowler joined Somerville and Associates in August of 2002 while she was still in college. And after completing her accounting degree, she was hired as a full-time staff member while in the tax department. She holds a Bachelor of Science in Business from Southwestern Assemblies of God University and a Master's of Science in Accounting from the University of Texas at Arlington. In 2008, she achieved the status of Certified Public Accountant, and she's a member of the Texas Society of CPAs and the Fort Worth chapter of TSCPA. In September 2020, Sandra achieved status as a Certified Payroll Professional with the American Payroll Association, and is an active member of the Fort Worth chapter of American Payroll Association. She manages payroll processing, payroll return, and one-time payroll projects. Additionally, she serves nonprofit organizations and ministers in the preparation of various tax filings. Nonprofit organizations and ministers. She doesn't, I'm sure she does minister to them in the preparation of tax filings, including Forms 990 and Form 1040. Also, our other speaker will be Dondi Hayhurst, and she joined Somerville in 2010, and she's been serving nonprofit organizations since 2000. She earned a master's in professional accounting from the University of Texas at Arlington. She's a member of the Texas Society of CPAs, the Fort Worth chapter of TSCPA, and the Greater Fort Worth chapter of the Church Network. Many of you may be a part of that, I don't know. Dondi has a working knowledge of nonprofit accounting in general, including accounting software such as QuickBooks, Shelby Systems, and Aplos. She provides general bookkeeping and consulting services such as bank reconciliations, chart of account, restructure, financial statement preparation, and non-disclosure compilations. I can tell you both of these ladies are very, very knowledgeable and capable, and I'm looking forward to hearing them. They're going to lead a session, and after that, there's going to be a 10-minute break, in which time you can get up and go get you something to drink or whatever you need to do for a minute, and then come back and we will do the other portion of the seminar. And so I'm going to turn it over to, Dondi, are you first today?
Yes, ma'am, I am.
I'll turn it over to you.
So thank you guys for joining us today and for those sweet words. I appreciate the opportunity to get to serve your churches, and hopefully a lot of times, so any one of these subjects we're going to talk about is a training in and of itself. And we have about 15 minutes to hit each one of them. So I had one client say it's like drinking out of a fire hose. So we've provided the handouts. I don't know if it's in the link yet or not, or if they're going to email those to you, but there's a handout that kind of gives some of the details, because we may skip over some of the details depending on time. And we obviously will be expanding on some of the details. So the first topic, and I'm going to try to share my screen, but I'll be honest, this is the first time I've Zoomed with a PowerPoint. So hold on. And I've already messed it up. Share screen. All right. Hopefully that.
Yeah, we're
Can
seeing.
y'all all see that? Good.
Yeah, we can see that.
Yep, we can see it.
So this first session, we're going to just talk about general tax and compliance topics. We find, especially with our smaller churches that we work with, are not necessarily versed in all of the different agencies that have a say in what you have to and get to do. So policies and governments, thanks to Sarbanes-Oxley, the Act of Sarbanes-Oxley in 2002, we have 3 very specific policies that are required by federal law. Sarbanes-Oxley was actually created for public traded companies, but because of the wording in the law, or at least that's what we've been told by attorneys, these 3 policies are also required by nonprofits due to the public nature of charities. So the first one is conflict of interest. So hopefully all of these you've heard of before. I mean, like I said, it started in 2002. So if this act was a person, it could sign a contract last year. It's 18 years old at this point. So it's not new. Hopefully you've heard of these things, but I think most nonprofits don't realize that they are required by law to have these written documents. And I think most, at least my experience has been, most of them have the policy, but they have never read them and don't know anything about following them. So if you have these, pull them out of your bylaws, dust them off, figure out what you're supposed to be following. But the first one's conflict of interest. So this policy should lay out who, when a mover, shaker, or decision maker in your organization thinks there's a potential conflict of interest between their fiduciary responsibility to the church and whatever decisions being made, how do they disclose that potential conflict of interest? So that's the first thing this policy should cover. The second thing is, who do they disclose that to? Is that the pastor? Is it the chairman? Whatever your governing body is, who do they disclose that to? And if it's that person, who do they disclose it to? I hope that makes sense. And so then the third part would be, how and who determines if a conflict of interest exists. And the fourth part of this policy would be, what do you do if it does exist? So is the person with the conflict of interest allowed to be part of the discussions, or do they have to miss the meeting altogether? Do they just abstain from the vote, or do they don't get to be in the room and they have to abstain from the entire meeting? How is it going to be documented, and where will it be documented? So those are the four main parts of the conflict of interest that your policy should answer. So again, you probably have it. I have found that most policies don't actually cover all four of these questions. The second policy that you're required by Sarbanes-Oxley is a document retention. So remember, Sarbanes-Oxley came out of Enron. So these three make a lot of sense when you think about what happened in Houston back in 2001, 2002. So the second one's document retention. What documents do you keep, how long, and where? And that should be updated annually. I mean, chances are you're not going to make changes to it, but it should be someone's responsibility to look at that policy once a year. And I would just recommend look at all your policies, your insurance policies, your document retention policy, anything kind of like that, and just do an internal audit, either a volunteer on your finance committee or a church member that is knowledgeable in those things. But you should be looking at your document retention policy and making sure, are we still storing it in the closet down the hall from the secretary's office? The documents you're going to want to cover are all your basic governing documents. Where do you keep your bylaws? Where do you keep amendments to the bylaws? Where do you keep minutes of the board? Where do you keep your audits, your financial statements, finance committee meeting minutes? And it doesn't have to be a paper copy. You guys can keep them electronically. But the importance is to have a written plan of what you're keeping and how long and where. So the third policy is whistleblower policy.
Just ask one question.
Sure.
Would you rather, if people had questions, would it be better to save them to the kind of the end of your time, or would you want them to ask now?
I think at the end of the time, just because we have to hit a lot of information in a short period of time, and we've kind of built in at the end of each session some extra Q&A.
Okay, excellent.
And so, yeah, I mean, between slides, I may see if there's any questions on that specific topic, but we do have some time built in toward the end of the session.
Excellent.
And I'm thinking most people will have similar questions, so we may be able to answer them all at once. Thank you for asking that. Sorry, I should have clarified.
Put in the chat the general tax. Let's see. Well, I can't quite see what the title of it is, but the general tax and compliance handout, so folks can see that if they have not seen it earlier.
Awesome. Yes, this is after the cover page. I'm at the very top of page 1 under policies and governance, and I've just covered little a there. So for the whistleblower policy, I think that's pretty self-explanatory. If somebody notices, well, let me start with fraud. When you hear the word fraud, most people who are not auditors or in accounting think embezzlement. Fraud is not necessarily just embezzlement. It could be the intent to deceive. And so I've seen a lot of fraud in churches in my 20 years. 10 of those were close to 10 were as an auditor of churches. And I've seen a lot of crazy things. And sometimes it's not always someone stealing from the church, but using assets in a way they were not designated. And so if you have somebody who's aware of these things, almost always there is an underling who has some inclination something right is not going on. So you want a whistleblower policy that tells your employees and your volunteers, if they notice something, who do they report that to? And if it's the person they're supposed to report that to that they notice it, then who's the second person that they report that to? And making sure that that's known. You don't want to just hide it in your employee handbook because, again, most small churches probably don't have employee handbooks. But you want to make sure that those that are handling money, those that are in some kind of custodial fashion of your assets, that could be your facilities people, which, you know, often I think there's probably a volunteer and or a pastor who is the facilities team, the worship team, the finance team. You probably have two main people who are doing everything. And so just making sure that whistleblower policy has two options, not just one. Okay, so that's kind of the first section. Those are the required ones. How am I doing on time? I got 5 minutes to get all the rest of them. So the best practices are laid out pretty well in the handout. The first one is the accountable reimbursement plan. This one's very important, even though it's not required by law, it kind of is. This is the way that your employees can spend their money out of pocket for the business and get reimbursed without it being taxable. You have to have an accountable reimbursement policy where they're filling out a form that says what was the nature of the expense, what was the vendor, they attach their receipt or other documentation, and that allows the church to write them a check and not include that in their taxable compensation. So point number 3 under that on the handout, this is one that most people don't know, but IRS does require if your meal that you're reimbursing as a business meal is $75 or more, you have to have the itemized receipt. The little credit card thing where you add the tip and you show the total, that is not sufficient for IRS. What you have to have is the itemized receipt that shows you had the number 1 for $7.99 and you had an iced tea for $2.99. They want the itemized receipt. So in your policy, make sure you have that meals over $75 require the itemized receipt. And then for everything with that, you should be documenting who was at the meeting, what was the purpose of the meeting, et cetera, et cetera. The second policy is the credit card user policy. This is important. I've seen this, it's important to have an agreement with the user. I have seen churches that give credit cards to people and then they go crazy buying personal stuff. And even though you can let them go, you never get that money back. And that becomes taxable compensation. And not to mention just the bad PR of letting a minister go crazy with the church credit card. So if you have credit cards that belong to the church, it's important to have a policy and an agreement. The agreement should be signed by the user before they get their credit card. Often with smaller churches, they get one credit card and somebody's the custodian of that credit card, like petty cash. And that's fine too. Just make sure you have a policy for checking that out so that it's in the place when the card's gone, who has it and what they have to submit back when they bring the credit card. But you want to make sure you have controls in place of those receipts. There are several apps nowadays that help with that. And so, you know, if church credit cards are a big thing for your church, you might want to look at some of those tracking apps to make it easier for that. If the employee does not submit their documentation, the receipts for their charges within the right period that your policy lays out, and I think it's, Sandra, is it 60 days for the IRS? Okay, that's what I was thinking. Within 60 days of the charge, they need to submit that documentation. If they don't, it should technically go into their taxable wages on their W-2. So because they did not substantiate the business purpose, the IRS says that should go on their W-2. I know very few that actually follow that, but that is technically what should happen. That's how serious it is to make sure receipts are turned in within 60 days. It goes, you get to pay taxes on it if you don't turn it in. The third best practice policy we have is gift acceptance. I just can't stress how important this is. And this is one that gets overlooked all the time, especially in small organizations. It is so important. This policy, and we've got 7 things there kind of laid out for when these are questions you should answer in your policy when you're designing your policy. But things I've seen from my experience is you need to, how does a new designated fund get created? If somebody gives $8,000 to the organ fund and you don't even have a building, are you going to accept that? Because now you get to hold that money and not use it till you're ready to build an organ. And we all know organs are not $8,000. They're lots more. So churches are taking them out because it costs too much to repair them. So how do new designated funds get set up for your church? What non-cash gifts is the church going to accept? I've seen churches with burial plots in other states. I've seen churches get real estate and the buildings collapsed on top of a car, or it was an old gas station, and there's a lot of environmental remediation costs that come with that. Jewelry, stock, these are things, I mean, jewelry and stock are pretty easy to sell generally. But what's your policy for that? Are you going to maintain the stock and have an investment account, or are you going to turn around and sell it the same day? So all that should be laid out in your policy. And the important thing is, so many times you want checks and balances in all of these policies, and in churches, we don't want to offend anybody. We don't want to hurt her feelings, and so we're not going to double check it. Well, you need to protect her, whoever her is, whoever he is. It is your job to have particular controls in place so that when Jane Doe gets mad because the church secretary wouldn't write her check for whatever it was, she can't come out there and make allegations that then you can't prove or protect her against. So you want to, I say all this with the gift acceptance policy, it shouldn't be the person who answers the phone's job to determine if you take these designated gifts or not. There should be a committee or a board or other governing body of 3+ people who, when we see a check come in for a piano fund and we haven't said, hey, we're taking up money for a new piano, that doesn't get deposited. When you deposit it, you've accepted that designation from that donor. It gets set aside, and this committee decides, are we going to start a piano campaign fund? And then if not, you go back to the donor and you say, thank you so much. We're not ready to buy this piano. Can we move your gift to a general, or do you want it back? But there should be a plan in place that it's not one person's job to say, no, I can't take that. You want to have that policy in place. So the last one is benevolence policy. Another one that is huge for churches that we see not often followed. So most churches are there for outreach. They have a benevolence fund of some kind. So you should have a committee who's reviewing those applications. You should have an application process. You should have the need of that recipient should be documented. And then, so what's not in our handout is, per the tax code, employees cannot receive benevolence. Employees are specifically removed from the gift and tax code of the Internal Revenue Code. So if you have an employee who does need benevolence, it is income to that employee, which is okay. Just make sure it gets included in your payroll, make sure it gets included in W-2, make the decision, are they paying the employee's taxes, or are you grossing it up and paying the employee's taxes? There's some additional things to be done there. You just need to make sure it gets included in their compensation. We can't just say, Sally needs help with her rent this month, we're going to pay her rent, without it going on her W-2. The decision-making body for benevolence and scholarships should be independent from those that are applying. So if you have somebody who's on that committee and their daughter is applying for a scholarship, they need to have a substitution on that committee that particular year. And then with, I've mentioned scholarships, you should, if your school has, if your church has a scholarship for schools, then there should be a similar policy to your benevolence policy for determining that scholarship. Who's making the decision? It should be 3+ people, not related to the applicants. The money should go directly to the education institution. I was trying to say bank, but that was wrong. It should go to the school. I kind of blowed through that pretty quick, but we're a little behind. Sandra, do you have anything to add? I skipped.
No, I think you're good. I think I do mention benevolence a little bit in the second session this afternoon.
Awesome.
As far as
So we'll hit some, yeah, a lot of this will get hit again when in specific to ministers. Okay, so the, oh, looky there, I had a whole nother slide. Sorry about that, guys. Here's all the policies I just talked about. So the next thing I want to talk about are state tax exemptions. These are very specific to the state of Texas. Most of these, I think all of these, you can find more information about on the Texas Comptroller's website. And in the handout, I give you some specific links to either the page and what to click to get to the form, or just the actual page. So the first one we see hugely out of compliance are sales tax exemptions. I can't tell you how many times in my 20 years I've heard, but we're exempt from taxes. And I'm like, you're exempt from paying taxes. You're not exempt from collecting and remitting taxes on tangible items you sell. So if you can touch it, it's almost always going to be taxable. And that means if you have a little bookstore and you're selling books, that means you should be collecting and remitting taxes to the state comptroller. Let's see. That's like I said, sales taxes are determined on state by state. So we're specifically talking about Texas. I figured being Dallas, we're probably all under Texas here. General rule, things we see sold, clothing like t-shirts and hats. Like I said, if you have a bookstore with flowers and trinkets, rental of personal property. So if you like to rent out the church fellowship hall to non-members, and that includes tables and chairs, you may have a taxable transaction there. You need to have somebody look into that for you. Cards and gifts. There are some ways, I'm not gonna say around it, but if you will structure your transactions the right way, it may not be a sales taxable event. And so the biggest example I see with this in churches is Bible studies. Often churches will buy books and then they sell the books. A lot of them say, we're getting reimbursed. If it quacks like a duck and it waddles like a duck, you can call it a goose. I still have to tax it like a duck. So if you're buying books and selling books, how is that any different than Barnes and Noble? And so that is a sales taxable event. You would need to charge taxes from your members and remit that to the state. However, if you have a Bible study and the cost of the Bible study is $10 and you get a free book with that Bible study, the Bible study is not a taxable transaction. So if you structure it that way, youth camp is very similar. You sell a $10 t-shirt for youth camp, that's a taxable event. But youth camp costs $150 and you get a free t-shirt, that is not a taxable event. So just consider what program fees you're receiving and what needs to be structured correctly. Now in the state of Texas, they have been very gracious and bless every 501c3 with 2 tax-free days a calendar year. These days have to be declared prior to the date. You cannot wait till December 31 and go, these were our 2 big sales days, so those are our 2 tax-free days. And we highly recommend that you document that, either in an email to the committee, an email to the board, vote it in. I mean, you don't even have to really vote on it, just mention it, make sure it's in the minutes. But if you ever do get audited by the state comptroller's office for sales, you want to make sure you have those 2 free days documented prior to the date. And so there's like I said, in the handout, there's a link that goes directly to that publication that talks about various things. And I didn't put the link here, but on the comptroller's website for exempt organizations, they have some for schools, for private schools, and those are very helpful also when you're looking at the tax-free days. Now, food for any food the church sells on the premises is exempt, just because the state of Texas has granted that. So that's out of the grace of the state that you do not have to charge taxes for your Wednesday night meals. Those are, or if you do Upward basketball and you have a concession stand that's on the premises, that is also exempted. The other thing that's exempted that's specific to charities are self-produced, self-published media. So think back in the day before COVID, when we sold the pastor's notes on CDs, this would be exempt because the pastor published it as an employee of the church. The church published it, you probably had CD writers, and so you were selling the notes of the pastor. That's not taxable. That's for books, DVDs, anything that you published and produced, and it's media. That's kind of the 3 criteria there. Yeah, I'm sure we have lots of questions on sales taxes, so we'll catch that at the end. I'm going to move forward to hotel tax. So many churches do not know, as a religious entity, you are exempt from hotel tax. So if your choir or your youth group is staying at a hotel on church business, like a mission trip or a tour, a music tour, you can fill out the hotel tax exemption form and get that exempted. So it's a short and sweet one there. But if you're traveling to other states, you might look at those states' comptroller websites and see if they have similar forms. But it's not much, but if you're staying in a bunch of rooms, if you've got a pretty good sized youth group going somewhere, it could save you some money. And any money you can save on taxes is money you get to put into the program of the church, which is what we're all about. The third one is franchise tax. So we like to say in Texas, we don't have an income tax, but in all honesty, we do. That's what the franchise tax is. That's an income tax on the corporations. So if you have not gone through the exempt application process with the Secretary of State, then you might be subject to franchise taxes. I find this a lot with our churches that will call us with a question, and I look them up on the state's website and find out they are not in good standing with the state. In English, that means you no longer exist. Your charter has been denied, has been revoked, and you don't exist as an organization. So it's very important to know whether or not you are in good standing with the state and if you've been exempted from franchise tax. And so if you've never filled out that application with the state of Texas, chances are you're probably not in good standing. You can go to the state comptroller's website, and I think it's on the very last page of the handout in the resource links. I have where the comptroller's exempt organization page is, and there's a search. So you type in your church, it pulls, if you are exempt, it'll pull up and tell you yes, 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 under sales, hotel, and franchise, if you have those exemptions. If you can't find yourself in the exempt organization thing, search, go over to the franchise tax and search for your organization. It'll tell you if you're in good standing or not.
Gandhi, can I interject here?
Sure.
For our Baptist churches, if they are in good standing with the convention, like the Baptist General Convention of Texas or Southern Baptists of Texas, they have a blanket exemption. So our churches fall under that as long as they're in good standing with the convention.
Are you sure that's state and not just federal?
I believe it's state sales tax, yes.
Okay.
Yeah, it is. Because
Okay.
I've seen our copy of it in our records at Bowles. So
Awesome. Good. Well, and that usually you just take that group ruling letter that you have from one of those conventions and you fill out the app. Someone probably filled out the application eons ago and submitted it. And that's really all you have to do. It's a very easy process. If you are doing the process, do it under the religious ministries. I mean, again, you're probably under a group ruling with the Southern Baptist Church of some sort. So you'll want to go under the religious ministries because that does open up some doors as far as housing allowance and other things. Real estate, not housing allowance. Is it the real estate exemption? I know there's a difference between just getting exempted with the state of Texas and getting exempted as a religious organization. So you want to obviously do the religious organization. So, all right, we're on time. Yay. So I'm going to pass it over to Sandra to talk about contractors versus employees.
So once your organization gets set up, one of the first things you start doing is finding people to help you, right? And so before we start getting people to help us and pay them, we have to figure out what type of worker they are. That's really important because it affects the way we pay them. It affects any withholdings we may need to have for them. So before payment, we need to classify them. In your outline, there is a big list of a bunch of tests. We're gonna go through those kind of briefly. These are from the IRS website and tests that we need to determine if the person we are paying for work is an employee or a contractor. A lot of times our default is that we want to make them contractors because that's easier from our end as reporting, but that may not be correct and may end up getting the organization in more trouble down the road. Because they were misclassified. So there are 3 different sections of tests that we kind of need to think through. It isn't specifically like if 10 of them are an employer, they're employees. If 5 of them, there's not a magic number here in this test. It's kind of a general feeling. You need to look at all these things to determine whether they should be an independent contractor or an employee. So the first set of tests here is about behavior control. So who controls the behavior of the worker? When and where does their work start? What tools are they used? Who's helping them? Who do they report to? If they have questions, is there somebody else supervising their work? Or is the worker themselves just kind of like, hey, do this project, and nobody's really controlling that how the work is done or how the supplies are purchased, what order they're done in, if there's training. A lot of times this behavioral control piece hinges on how much judgment are we letting this worker have. And whether somebody is telling them what to do or if they're doing it themselves. It gets a little tricky sometimes when we hire higher level thinkers to do a more sophisticated kind of project, because I think we rely on them and their judgment a lot. But so we have to determine who's really controlling the behavior and the activity that we're paying them to do. That's that first set of tests. The second set of tests is financial control. Who's paying for what they're doing? Are we reimbursing them for business expenses? Are we paying for their equipment? Who's at risk here if this project doesn't work or doesn't go through? Are they personally at a loss? Do they have the potential for profit or loss from this activity they're doing, or is it the church? Obviously, if the church is the one who's paying for most of this stuff, the church is the one who's controlling the behavior and the act that we're paying them to do, they're most likely going to be an employee. And we need to figure that out pretty quickly on the front end because of how taxes play into this. The third type of test here is the type of relationship. And I want to say right quick, a lot of times we put a lot of emphasis on the type of the relationship to determine if this is an independent contractor or an employee, when really that's just one of the pieces. Under type of relationship, do we have contract written? What does that say? Are we giving them benefits? We can't give benefits to an independent contractor tax-free. I mean, a lot of those pre-tax benefits we give our employees are only available for employees. So if it's a contractor, that has to be taxed to them. Permanency. I think in general, we make this the only test a lot of times. You know, oh, they're just working in the daycare or in the child care for a couple weeks. They're just going to help us out temporarily. We'll just pay them cash or check, whatever. We'll just give them a 1099. Whereas that's just one of these 15 tests. That's not the primary purpose. It also gets really sticky when we hire someone short term to see if it works, and then we want to make them an employee. Well, if the job is the same, if the relationship didn't change, if none of these tests changed, they really were an employee that whole time. Something needs to change in that relationship to change them from an independent contractor to an employee. We're really leery about issuing both a 1099 and a W-2 to the same person in the same calendar year. That looks fishy to the IRS, to whoever's looking. One of these probably is not correct. Now, we can get away with it sometimes if the work is really very different. Like we have an employee and then they also happen to like mow the yard at the church. And they're employed to work with media or something like that. So if the jobs are very, very different, you can kind of get there. But if they're doing the same thing and we just decided eventually to make them an employee, that's not the way the IRS sees them. And that's not the way that should happen. The last piece in that little relationship piece there is how important is what they're doing to the organization. It's really interesting a lot of times we went to hire somebody to do something that's very important to us, but if we pay them as an independent contractor, we're basically saying they're controlling what they're doing and not us. And that can be a little scary. Not saying that we have control over, I don't know, one of the main pastors or the head of the children's department or something like that. I mean, where's the liability going? You know, if something happens and we didn't have control of them. That can be a little scary. There is a voluntary classification settlement program the IRS has offered, but you have to meet certain criteria to be able to do that. So what this allows you to do is if you've been paying somebody incorrectly, like as an independent contractor, when you realize they really should have been an employee, this allows you to switch them to the correct classification. We don't just switch them, we kind of get permission from the IRS in this program to switch them. But in order to do that, we have to have correctly filed their 1099s for the last 3 years. So we have to have reported this income to them for the last 3 years. And then we file this form and we tell the IRS, okay, we want to switch. Usually it's set up in like classes of employees. So we have 4 or 5 childcare workers. They really should have been employees, but we didn't treat them correctly. But we want to switch them as of this day to be employees. And so you send that form to the IRS and they basically bless it and come back to you and tell you, yes, change them as of this day. And what that does is it allows the tax penalties and the tax consequence of that to be much less than if we just went back and amended all the forms and withheld the required taxes and that kind of thing. They pay about 1% of wages in taxes, whereas Social Security and Medicare alone is 7.65%. Now let's double that for both portions. We're at 15%. If we were just to go back and fix it and not go through this voluntary classification settlement program. So knowing all that about worker classification, there's a couple areas where we see the most abuse in this. One is your nursery workers. Usually, based on my experience, we want to make them independent contractors because of the permanency piece. I feel like there's a lot of people in and out of that position, and oh, we just had one event, we need to hire somebody to watch the kids. That's where people tend to make them independent contractors and not employees. But we have a lot of liability with those workers. So if we're willing to say that we didn't control the people who are watching the children, that can be kind of scary if something happens or there's an accusation or in that setting. The other place we see abuse a lot is with our worship musicians, and we want to call them all independent contractors. But the IRS has clearly said in a couple of tax court cases that our worship leader and all the musicians are employees of the church. So either we're paying the worship minister as a contractor and then they're all his employees, or they're all our employees based on the tax court rulings going back. So you have to be really careful when you're classifying these employees and contractors that you classify them correctly. I will say that there is a different test for the Department of Labor as far as independent contractors and employees. It's not super different, but there are a few differences there. So that would be the body who governs overtime and that kind of thing. So most people, you can get consistency between the two, but it is possible to have a person who's an employee for IRS purposes who the Department of Labor considers a contractor, and that's kind of a little bit of a muddy situation there, but it does happen sometimes. All right, the next slide, other filings and report requirements. There's a lot, wrong way, there we go. We've kind of grouped these into different pieces of different things that you just need to realize is out there and needs to be filed by the deadline. The first set we're going to talk about is employment related forms. So once we determine someone is an employee, right at the beginning, right at the front, there are some forms we need. Y'all should be pretty familiar with these, and I would guess you are. You need an I-9 for the employee. That determines that they're legal to work here. And that can get kind of muddy if you pay them and they're not legal to work here. That could be really bad for the organization. So definitely need to get an I-9. Also the W-4, that form was totally changed in the beginning of 2020. And it actually looks pretty complicated. I think because we're just used to the other one and it hadn't changed in so many years. But the W-4 basically tells the employer how to withhold taxes for the employee's paychecks. And the new W-4 looks a lot like, it's basically a shortened tax, I lost my word, like a tax estimate for the year, basically. It takes into effect different parts of that person's income and status, and do you have other outside income, and would you maybe owe tax, in a way to try to make it so that people who normally would have a job and then separate work, that all the tax is getting withheld from the employee's paychecks, which is a little interesting to me. But that's the way that form is set up. It's kind of complicated if you haven't done that before. If you don't have any new employees, new as in since the beginning of 2020, you can continue to use the old W-4 forms. But anybody you hire after 2020 or who wants to update their tax withholdings starting with the beginning of 2020, you have to use the new form. And that's an IRS requirement. You can't go use an old form. And in the state of Texas, when you hire someone, there's also a Texas new hire form that has to be completed and submitted to the state, which basically tells the state that you've hired this person. And the main benefit is that they're trying to track down people who are owing child support and that kind of those type of garnishments, so that garnishment can continue or start with their new employment arrangement. Donna, you want to talk about charitable contribution receipts?
Yeah, I was going to go back to the W-4 real quick. Sandra pointed out that you don't have to update the W-4 except for, for changes after 2020. But somewhere about the middle of 2020, all the accounting systems switched over to the new tax tables. So if your pastor's on a 2018 W-4 and you're processing payroll using QuickBooks, he's probably not got the right withholding coming out. And it may not even be pastor, because usually those are dollar amounts that they tell you what to take out. But just be aware, if somebody is on a pre-2020 W-4 and you're processing payroll using a payroll subscription of some kind, it's probably not calculating the right withholding for them. So they will either end up with a huge refund or have to pay.
Probably have to pay
on their 1040. Yeah. And so I just wanted to, even though you may not want to update it, the accounting systems have made that decision for your calculations. So yeah, charitable contribution receipts. There are some myths with this, and there are some requirements. So the biggest myth is the fact that they have to be out to your donors by January 31st. This is made up. It's because your donors, well, it's been associated with everybody in their heads the same as W-2s, because that's when all the other tax forms have to go out. So obviously that's when the charitable receipts have to go out. That is not true. There is no due date on your charitable receipts. The requirement is on the donor and not on the organization. It is required that the donor for an individual gift of $250 or more have a written acknowledgement from the organization. So if you don't do your donor letters, you will be getting calls from all your donors wondering what they gave. So organizations do this to keep their donors happy, but if you're busy doing W-2s and 1099s in January, the contribution receipts are the things that can be pushed into February, because there is no IRS deadline for that. However, if you are going to do written acknowledgments, which is another way of saying contribution statements or donor letters, there are specific things for that to be a qualifying receipt for the donor. This has been a hot topic in IRS tax court over the last few years. And so they are throwing out major donor donations because it's missing the no goods or services wording. So it's very important to make sure you have all the pieces on your contribution letter. And you can find that in IRS publication 1771. And there's a link to it in the handout there. I would highly recommend, if you've never looked at this publication, download it, read it. I think it's maybe 6 pages. It's really not that long. It gives you most of the questions you're going to have on what you need to send a donor and how are going to be in this publication, and it's very helpful. But if you're in a quick hurry, go to the written acknowledgments section, and there's like a list of 6 things that you have to have on your donor letter: the name of the organization, the gift amount, and then the no goods or services statement. And for churches, it also needs to have the intangible religious benefits tag on. So you would say no goods or services have been received for these gifts unless otherwise noted, except for intangible religious benefits, something along that line. Anyway, so go find that publication 1771. There is another publication, and I mentioned it in the resource, that is specific to the donor. So if the donor has questions and you want to give them a resource, you may, have that link available. And it's always good to know that for you as well. But what the organization is required to do is in publication 1771. And you can find that at irs.gov. Like I said, there's also a link in it. Sandra, you want to talk about more payroll forms?
Yeah, and this is more kind of the quarterly forms that get filed. So all churches are required to file a Form 941 quarterly with their wages that were paid during that quarter, or a Form 944 annually. The 944 is a form mainly for smaller organizations who have less tax withholdings. That's how the threshold is set up. You do have to get permission from the IRS to file the 944 annually instead of the quarterly 941. But those quarterly forms are due the last day of the month after the quarter ends. So the March first quarter 941s are going to be due here in a couple months, the end of April 30th, and then June 30th, September 30th, and December 31st. So all those are due quarterly. Quarterly for the employer to the IRS. We have seen some confusion with smaller organizations where they're paying the tax and not realizing there's also a report that's due quarterly. So like they've been good paying the tax that was withheld, but not filing the form and not realizing that's two separate things with two separate due dates. So we've seen that a little bit. Also, you have annual forms, the W-2 that is due to the Social Security Administration by January 31st. If you're not familiar with payroll forms, it may throw you off that this is not going to the IRS. It does get there eventually, but that's not where they're filed. They're filed with the Social Security Administration, and eventually the systems match up to each other. That's due by January 31st. All these deadlines are moved to the next banking day if it's a weekend or a holiday for some reason for the calendar year. Contractor forms are also due to recipients by January 31st. This year, starting with 2020, there was a new 1099 form that was created called the 1099 NEC. And the only thing that gets reported on that form is your non-employee compensation. So this is what would have been in box 7 of the 1099 miscellaneous from previous years. They got their own form now. The purpose seemed to be that they're trying to get those out earlier, but not necessarily penalize all the 1099s. So like if you just had a 1099 for rent or royalties or something like that, that isn't due until the end of February. But the one with all the non-employee compensation is due January 31st, both to the recipients and to the IRS. The 1099 is required for any entity that is not a corporation. That includes LLCs. And honestly, if you don't have a W-9 from them and you don't know, it is in your benefit to issue the 1099 anyways, because there are pretty stiff penalties if you didn't file one that you should have filed. I haven't seen those penalties assessed personally, but I do know that the IRS is getting more diligent in doing that. So any entity that you pay more than $600 or more for services during the year, paid in cash and check. We saw this quite a bit this year. I think because of COVID, people moved a lot of their payments to not be cash or check. So we paid them through PayPal, or we paid them using Square and credit card and that kind of thing. Any of the payments made to your vendors using those systems is not reported on the 1099 to your vendors. So if you paid everybody using credit card all year, you don't have any 1099s to file. And that we had a couple people actually who were like, hey, why didn't so-so get a 1099? Like, well, you started paying them in PayPal. And they didn't realize that eliminated the need for a 1099. Part of the reason that happens is because those processors, PayPal or the credit card, send their own form to those people. It's called a 1099K, and that gets sent to the vendors saying, hey, here's what you received through PayPal or through credit card or through a Square app. So that would, by us filing it to the vendor and the credit card processor filing it to the vendor, that would duplicate the income that was reported to them. And so because of that, if we're paying them through a credit card system or PayPal, those services don't go on a 1099. That's to just helps out with the IRS. And I don't know if any of y'all have ever received a matching notice that says, hey, the IRS got this much money for you. You didn't report this much. That would happen all the time if we're reporting both directions from the vendor and through the credit card processing. So that kind of got rid of that. I think that's all there is on 1099s. Dawn, do you want to go ahead and talk about the donated car reporting?
Yes. So a few years back, and I say that's probably been 5 to 10 years at this point, the IRS kind of got tired of everybody donating their broken down old vehicles and claiming way more money than they should have in the fair market value. So they created this form 1098C. If you receive a donated vehicle, then it's required to fill this form out and give to the donor within 30 days of donation or 30 days of the sale of the vehicle. And then you would also file that with IRS and then follow up in January of the subsequent year with the 1096 for that 1098C. The 1096 is kind of your summary form. So any of these 1099s we've talked about, or the 1098C, there's various other ones. You send in this 1096 and tell the IRS, you kind of check which form you're talking about and how many of those did you file. And so that's the other part that gets forgotten is they do the 1098C, but then they forget to follow up with the 1096 later at the end of the year, summarizing how many of these forms they filed. So the donor will need the 1098C in order to file their taxes, their personal taxes, and take a charitable deduction for it. Vehicles, while mostly what we see are autos, can include boats and planes. I would think scooters. I'm not sure about trailers. I've not looked into it. If somebody donates you a trailer, you might want to look at the instructions in 1098C and see about that. But that's, I find often with my smaller organizations, they write a non-cash gift thank you letter to the donor. Thanks for the Oldsmobile that had 200,000 miles on it, and give that, and that's not sufficient. And so then the donor has to come back and ask for this form when their tax preparer says, hey, you can't take this deduction. Not that we're on the tax preparer side often. So it's a fairly easy form to fill out. You may want to collect the donor's social security number if you don't already have it for some reason. Just again, for easier matching for their tax return so that it makes it a little easier for them to take that charitable deduction. But if you sell the vehicle, then that has to be disclosed what you sold it for and will dictate what they can write off for their vehicle. If the vehicle is it's valued at less than $500, and this is fair market value. So to, go to Kelley Blue Book or any of the other insurance valuing websites and plug in the mileage and all of that kind of stuff to get you a fair value. You do not give that to the donor. All you do is if you sell it, you give that information on this 1098C to the donor. And that will cap their contribution deduction. But if you keep it or you give it away to a needy person, there's a different place on the form to check that. And then it would be up to the tax preparer and the donor to determine what the fair market value of that vehicle was to write it off. Now, for your books and records, you would still need to estimate the value and record that as a program income and expense. But all you would give the donor is this 1098C, and if you want to, a thank you letter, but do not give them a value. And that's a non-cash across the board thing. If somebody gives you non-cash, you don't give a value. You say thank you for the gift of, and you describe it so that it's up to them and their tax preparer to value what that donation was worth. All right, am I doing 8282 or are you doing 8280? I am, okay. I was like, they seem to go together, but I didn't mark it down. So the other thing that kind of gets missed by most of my organizations are the 8282 and Form 8283. So if somebody donates to the organization an asset that's greater than $5,000 that is not publicly traded, so most of the time I see land with this. large land donations or a building donation, can be stock that's held personally. So you have a member in your church that is getting ready to sell their company and they want to give you stock that's not publicly traded. This form needs to be filed. So the donor files the 8283. The organization must sign the 8283 saying they received this asset. It also has to be signed off by a certified appraiser. I say that slowly and emphasize it because this is what happens all the time. The organization signs they received it, and then 12 months go by and they find out, oh, we have to have an appraiser sign it. So before you sign the 8283, make sure they have the certified appraiser's signature on it so that you know what the value of this asset is. And then you would sign the form and keep a copy of what you signed. If you sell this asset within 3 years, you have to file the 8282. And what the IRS is going to do is they're going to match that 8282 with the 8283 you have signed within the last 3 years. And they're going to adjust the donor's contribution down if you sold it for less, if the value was significantly different. And so I haven't seen this a lot in my 20 years, but I have seen 3 or 4 times where land was donated to the church and the church turned around and sold it within a year, and then they didn't know to file this 8282 or didn't know about the appraiser signature for the 8283. So that's really just one of those things to kind of flag in the back of your head. And if you're ever lucky enough to have somebody come in and say, hey, I want to give you this piece of land, look up, you have a reference to what form to pull up and figure out what needs to happen. Okay. I think, did you want to add anything, Sandra? Did I miss something on that one?
No.
No.
I think you're good.
So I think we're going to open it up for questions before we officially start taking questions. And let's see if, yeah, I should have switched my screen. So here's a resource. Our shareholder, Elaine Somerville, has quite literally written the book on church compensation. It is published by Christianity Today. So if you're interested, here's the link. It is also in the resources of the handout. But I have to say, Elaine and Sandra went through every question every church has ever asked her in her entire career for both of them. And it is in this book. So I would be surprised if you have a church compensation question that is not covered in this book. It may be over covered in this book, but it's an excellent resource. Here's our email addresses, phone number. If you have questions, feel free to email us. Just know during tax seasons, we may be slow to respond sometimes. And then on the handout, I gave you some resources. The one I forgot to add to this is the church network. Tammy mentioned that I'm a member of the Greater Fort Worth chapter. Both Fort Worth and Dallas areas have excellent chapters of the church network. So thechurchnetwork.com, they put on a fantastic conference every summer, and it really hits administration, governance. I think they've got some IT branches now too, but just looking for a place to ask questions, thechurchnetwork.com is a great resource, or get involved in your local chapters and you get to know other churches who do things similar to the way you do things. I mean, you guys have a great resource with DBA already, so it's not like you're out there alone like some of the other non-denominational churches are, but just to have someone in your area to talk to. In Fort Worth, I've matched some of my clients who started coming with other clients I've known for the 20 years that I've been in church accounting, and they were able to ask some questions I didn't know the answers to because I'm not in the front lines like you guys are every day. So just add that one to your resource list. The church network also has a compensation survey that you can be a member of, and if you provide the information, and it's not shared by the church names, but if you add your information to the collective data, then you get that compensation survey for free. And it's really helpful for setting ministers' wages and specific church position wages to make sure that you're not, and Sandra will talk about this in the next session, but unreasonable compensation is something that nonprofits have to worry about. And so that's a very useful tool for that. So, okay, I think I'll stop sharing and we can open it up for questions. Scott, did you want them to type them in the chats, or do you want people to
Actually,
just
I think we can, if you want to,
go for it?
excuse me, if you do have a question, you can obviously type it in the chat. But if you'd like to just unmute, you're certainly welcome to ask a question in person. Donna, it looks like you're unmuted. Do you have a question?
I do. Yes, Dondi, this is Donna Waller from Bowles Baptist Church in Grand Prairie. Just a follow-up question on the item you talked about, benevolence for employees. How is that different for contractors? And we have a legitimate contractor, although some of them are maybe not as good, but this one's legitimate. It's our person that does the grounds, mowing for us. And they hit all the criteria, but sometimes, we might consider giving her a benevolence. How do we handle that? Did we just add it to her 1099?
Well, you can give contractors benevolence, and I'll say what little bit I know, and then Sandra can pipe in because this is more payroll related. And but you can give contractors benevolence. We recommend that you follow your benevolence application process if they need it. Now, if you guys are just giving her money and it's more like a bonus or it's tied to services in any way. So that's the thing you have to watch out for, is the amount cannot be tied to services. So they have a legitimate need. They can't make rent. The kitchen burned down and they need help with the deductible, normal benevolence type issues that are not related to their service for the organization. Then you are welcome to give them benevolence, and it does not get included in their taxable income. Where we see it a lot of times is you have a guest speaker, so pulpit supply, that comes in and they do an honorarium. And so a lot of times they won't put that on a 1099. Well, that speaker spoke for that money. So that should go on a 1099. So hopefully that kind of differentiates them. Did I miss anything, Sandra?
No, that's correct. The code that excludes gifts is specifically talking about employees. So you can give gifts to contractors, but like Dondi said, you don't want it to be connected to services. A lot of times we'll put, if a client gave like Christmas gifts to some reoccurring contractors, we usually consider that compensation because that relationship is totally based on those services.
Right.
But you can give benevolence to a contractor. Just
Okay.
document it like you would any other benevolence to anybody else. Approve it through the same normal procedures.
Okay.
And you should be fine.
Great, thank you.
Thanks, Donna. Anyone else have a question they want to ask at this point?
Do you have samples of some of your best practice policies? The reimbursement plan, credit card user policy. Do you have samples of those?
We don't. Frank Somerville with WKPZ, which is Elaine's husband. You guys may or may not have heard of them. They do have some sample policies they will send out. And one of the links I provided to the Church and Law Tax Store has Michael Batt's book. And he's got policies in that book that you can, I believe, sample policies. And the ECFA also puts out a book every year that kind of talks about the different policies and gives you some sample forms. So we don't really, because they're already out there, but go ahead.
And the policy making side is more of a lawyer.
Yeah. We're not allowed to
task
practice law.
And not a CPA task.
So yeah, so we just send you to the other guys. I think the church network would also have resources that you could find.
Had another question on the compensation for musicians. So we are paying them through payroll, but we're just paying them a flat fee per pay period. And I was in another seminar where they said they really should be kind of punching the clock. We should be paying them on a per hourly basis versus a set amount per pay period.
Well, the concern is obviously minimum wage and overtime issues. If you flat fee them, we have personally, we have a couple people who were flat feeing them, but they still give us their hours. So we calculate to make sure we're meeting those minimums, because people don't get upset about that until you've terminated them. And then they come and say, I worked all these hours and you only paid me $100 a service, and I worked way more than what minimum wage would be paying for that service. So that's the main reason, from my experience, to track that kind of thing. Just to kind of know what they're working compared to what you're paying them, to see if that meets the minimum wage and or overtime requirements.
Okay.
Yeah, and I've heard Elaine recommend to some of our clients that do the flat fee for the musicians to make sure that their employment contract is written that way, that they will make $50 a service, or if that's how you're paying them, that you write that in the contract so that it's not tied to their hours. But then, as Sandra said, you still need to do the timesheets. They should still be punching a clock, because when the Department of Labor comes in, basically like Sandra said, when they get mad and they go and they can't get whatever they want and they turn you in, the Department of Labor comes in to audit, they're going to want to know where their timesheets are. And so they should be made, because they are non-exempt, is that right, Sandra? Non-exempt employees, there should still be timesheets kept on them, even if you're not paying them an hourly wage. Sorry.
Okay, I have a question. We have not been having to pay our staff, but this year we are looking forward to doing that. Who can I sit with to get to help give us everything that we need to get started?
You're going to start paying them this year, is that what you said? Sorry, I didn't understand.
We want to start this year to compensate them with a little thing. We don't make that much money. We are not a big church, but we see the sacrifices that they put in. We want to be part of assisting them.
Are we just talking about minister employees?
Yes, ma'am.
Yes. So the ministers, it's a little bit different. We'll talk about this a little bit this afternoon. There's not quite as much of a liability or a tax situation with the ministers, as far as if we 1099, if we call them independent contractors or employees, except for benefits. But yeah, if you have some specific questions, I would be happy to sit with you or talk you through setting that up. What accounting software are you using? Do you use an accounting software?
No, we have not been using anything. Okay. Everybody's just been free, including the pastor.
Okay. So yeah, if you want to send me
we want to start with some kind of compensation this year.
Yeah. We do payroll processing for small churches, so you could outsource to Sandra. But I mean, we're not here to sell our services right now, so reach out to her and we can get that connected. And Scott, do you guys have specific resources for that, for the church plant?
Well, we can definitely help talk you through that a little bit, Brother Sammy, but using an outside contractor is an easy way to handle that, to ask somebody to do your payroll for you. But we can talk more about that, but also talking straight to Sandra would be great.
Okay, thank you, Scott.
You're welcome.
Okay, anybody else have a question right now? Okay. Well, Dondi, is this where we take a short break?
I think so. I was like, we're a few minutes ahead, but I mean, that's okay if nobody has any more questions on policies and such. Yeah, let's take a 10-minute break and come back at, that would be 10:25. Is that good? Yeah. Or do we want to wait until 10:30?
And everybody should have had, let's say 10:30. We can just give us a little bit of time. In fact, I will put in the chat the handout for the second session, but you should already have it by email. Send it a little bit earlier during this session. So you can look in your email and see if you have those two handouts there. You might make sure you have it printed out and ready for notes on the second session. So since that brings us almost to 10:30, you want to just say straight down 10:30 that we'll reconvene.
Perfect. Thank you.
Okay. If you want to sign out, you can, but and I'll readmit you, but if you want to just stay on, that's completely fine too.
Dolindy, can you hear me? Is my screen share right? Okay. Sorry. It's so weird because I don't see what y'all see. It's messed me up.
Boy, this has been great, guys. Thank you so much. This is incredible. Very practical and very helpful. Sandra, I only know one other Fowler. Do you know the John Fowlers that live in Oak Cliff?
No.
Okay.
Well, my husband's family's out Decatur direction.
Out in what direction?
Decatur.
Okay, yeah. Okay, it may be 10:30. All right, well, this has been really, really good and really appreciate it. Hopefully everybody's had a chance to look at the handouts, which I think in this case are these slides, right? With a place for notes out to the side.
Correct,
So,
that is
if
correct.
you don't have it printed out, you'll just see here on the page, on the screen what it is, and you can make some notes of your own. Okay, well, thank you guys. We'll turn it back over to you.
And I was gonna say real quick, Sandra, we've added some time to the end right before noon for all questions and answers. So if something from the first session pops up, or as Sandra's talking about minister's taxes, and you can start connecting dots and having additional questions, just write them down and we'll hit them all at the end, but we'll have more time at the end of this session than we did the other one for questions on all things accounting, policy, minister's tax. Okay.
Whatever you want to know that we can answer.
Great.
Okay, well, this next session is primarily about the ins and outs of minister's tax issues. I've been working here at Somerville Associates since 2002, and I've been the payroll manager here, I think I determined at least the last 10 years. So this is kind of where I stay a lot. But what we found is that ministers who are not generally super administratively minded have been dealt given a more complicated tax situation. And so as their employer, you have to kind of understand what that means when you're hiring ministers, which inevitably you will. Your first employee will probably be your minister. So first we have to define who a minister is. This definition here is the IRS definition. Now there's a different definition for the Department of Labor, which is a little bit different, but for our purposes today, we're going to talk about the IRS definition. So there's a two-part test as to whether a person is a minister for IRS purposes. The first is they have to be commissioned, licensed, and ordained by a church. All churches call that something different, but basically some type of a certification, licensing that says you're a minister according to your church. And the second thing that they have to be doing is they have to be doing minister things, minister duties. The slide here lists quite a few of them, but the main ones are performing the sacerdotal functions, which is weddings, funerals, sacraments, burials, conducting religious worship services, control, conduct, or maintain a religious organization, teaching at a religious school, or on assignment by a church. So before they can be a minister, they have to have both. They have to be licensed, and they have to be doing minister things. So you're normally not going to treat someone as a minister who is licensed, but is the janitor at the church. Normally they're doing minister things, and the congregation views them as a minister with those purposes. I've found a lot of time, or sometimes more commonly, we're seeing people who are doing minister things, but then are not licensed. So you have to have both in order for you to be treated tax-wise as a minister. For the Department of Labor purposes, Am I right, Don? Yeah, I was about to mess myself up. I don't think there's a licensing requirement for the Department of Labor purposes.
That is correct.
So that would be like
what I saw Frank taught last time was, yeah, if you're doing theological training. So sometimes you can have an early learning childcare teacher who's not a minister for IRS, but is teaching Bible stories to the youth. So is a minister for Department of Labor. I think that's the best example we've seen.
Yeah, and I think, you know, like I said a little bit earlier, the Department of Labor is who governs overtime and minimum wage. So in your Department of Labor, there's a ministerial exemption. So that's why it would matter if you were a minister for their purposes. So like your youth minister could be not licensed yet, like he's working on that process. But you still wouldn't have an overtime or minimum wage situation to deal with there. Okay, so once someone is both licensed and ordained and doing minister things, you have to treat them as a minister for tax purposes. And if you aren't very familiar with this, in a moment you'll see why that's a difference. But you don't get to choose. They don't get to decide, oh, I don't really like that. I want to be taxed like a normal employee. Once they're a minister, you have to tax them as a minister. So ministers are a little bit odd. Once we've identified who our ministers are, there are two questions that we have. One is, what does that mean for federal tax purposes? And the second question is, so what does that mean for Social Security tax purposes? And for our ministers, they're treated differently for those two different pieces of the puzzle. So for federal income tax purposes, they're considered an employee of the church. That means they can do benefits. That means they can have health insurance premiums that are tax-free. They get a W-2, not a 1099. But they also have the option of having income tax withholding. Whereas your normal employees will give you a W-4 and you'll withhold based on their W-4 status. For a minister, you don't have to withhold anything from their paycheck as federal tax. That doesn't mean they won't owe it later. It doesn't mean they don't have to pay it, but you're not required to withhold that for federal tax purposes. The other type of minister we see, and I kind of did this slide backwards, is whenever they earn income outside of the church. So a traveling evangelist or a minister even who just preaches at different churches, they're not considered an employee of each of those churches. That would be a contract labor kind of situation. They're paying him for outside services for pulpit supply. That type of income gets reported on a 1099. So like honorariums for your guest speakers, like Donnie spoke a little bit earlier. But your employee, your primary minister, even your youth ministers, any of those people who are employees on your staff, they're going to get a W-2 and not a 1099. And they get the benefits of all these other employee benefits for federal tax purposes. So what about Social Security and Medicare? Well, there are two ways that people can pay into the Social Security and Medicare system. The first, which we see most commonly, is FICA. This would be a normal employee who has Social Security and Medicare withheld from their checks, and then they're matched by the employer. We see that the most commonly, most common. And the second way is through SECA, which this is how self-employed people pay into Social Security and Medicare. So they have a Schedule C on their personal tax return. They pay both portions of Social Security and Medicare into that system. So for a minister, for Social Security and Medicare purposes, they're considered to be self-employed. So we're not withholding Social Security and Medicare from their checks like a normal employee and matching it. They're considered they pay into the system through SECA, not FICA. So there's not an option to withhold that and match that. That seems a little confusing, but that's the way the law is set up. So they pay in through the self-employment tax system like anybody else who is self-employed. And they don't have an option there. There's not an option. They have to pay in through the self-employment system and not through FICA. So what that means is that Social Security and Medicare, like I said a second ago, is not withheld from their checks at the normal rates and matched. We're not allowed to do that. They are considered self-employed and they file Schedule SE on their personal tax return and pay self-employment tax on all of their wages. unless they've received an exemption. Now, that exemption is a personal decision and really has nothing to do with the employment side. But a minister can choose to opt out of Social Security. So this has to be done within the first couple of years of their employment as a minister. And basically what they're saying, they're telling the IRS that they're opposed to socialized insurance. So I don't think that the government should be paying for my insurance. And they have this option as a theological belief opposed to socialized insurance. So what that means is when you file this form and it's approved, you don't have to pay Social Security and Medicare or self-employment tax. But that also means you don't get the benefit of that later in life. So when you go to retire, you don't get a check from Social Security to cover your retirement because you're not in that system. You elected out of that system. So, but none of that affects how the employer is treating you. What I've seen a couple times is people will say, well, he's not opted out, so we have to withhold Social Security and Medicare. No, that's not correct. We still can't withhold it. This option to elect out of this is has more of an effect on his personal tax return and what he personally owes in taxes than it does on the employer side and how we tax him as his employer. It's not effective until it's approved by the IRS. And once it is approved, it usually goes back to the date of ordination and you can go back and you can change his personal tax returns. But once again, that does not change how we're taxing him as the employer. There we go, same thing. So here's what a minister W-2 looks like or should. There are 3 boxes, maybe 4, that a minister should have numbers in. Box 1 is your taxable wages, federal wages. Box 2 is going to be any tax withheld. Remember I said they're not required to have federal income tax withheld, but they can. Like they can say, hey, can you withhold $50 a check? And you can withhold that for them. But that would be reported here in box 2 of the W-2. There should be nothing in box 3, 4, 5, or 6 ever for a minister employee. They don't have Social Security wages, they don't have Medicare wages, and they don't have the related taxes. That's not an option, that's the way it is. The other things we see on their W-2s kind of commonly is in box 14, we see housing allowance, and we'll talk about that in a little bit here. And then if there's an employer provided auto and we consider that to be 100% personal use, we'll talk about that in a little bit too, I think. That value would also go here in box 14. But box 14 is just disclosure information. So there's no tax calculated on any of that. So, but generally we see housing allowance there in box 14, although that's not required either to be disclosed there. So the main important part of this slide is that their W-2 will only have box 1 and box 2 with numbers. If there are numbers in your minister's W-2 in box 3 through 6, the W-2 is wrong. He's being taxed incorrectly, according to his classification as a minister. Okay, so what's considered income? The easy, obvious thing that we know is income is their salary, right? That's run through their check. We know that's income to him. But for ministers, a lot of times we see other things that are not common to other employees that ministers have, in addition to just that normal salary. So the first thing we're going to talk about is housing allowance. So basically what housing allowance is it is a designation of a portion of their compensation as housing allowance. And why would we do that? Because housing allowance is taxed differently than salary. So anything that is paid as housing allowance is not subject to federal tax withholding. So the federal tax you pay on your personal tax return, if something is designated as housing allowance and used correctly, the minister does not pay federal tax on that. So basically, we say that he's going to use a portion of his compensation to pay for his housing expenses. And when we designate that as such, then we can then it gets taxed differently. There's another slide on that too. Okay, so organizational issues. Before you can have give somebody a housing allowance, it has to be designated by the employer, the church, in writing before it's paid to them. So I've seen churches where it was designated and then not correctly categorized during the year, like went back and fixed it. But we can't designate it at the end of the year and come back and say, oh, all this is housing. It has to be designated before it's paid to him in writing. So basically what we recommend is that the minister tell the compensation setting committee, HR, whoever's in charge of that, this is how much I would like designated as housing allowance. In an email, a lot of churches have kind of a standard form they have the employee fill out. And they provide that to the HR, who then gives it to the board or the compensation setting committee, whoever that happens to be in your church. And they designate that in the minutes of the board meeting. So that is designated, and so that a portion of his compensation can be taxed differently and can be taxed less. So what are valid housing expenses? What can they include when they're trying to determine how much of their housing, how much of their compensation can be considered a housing allowance? Well, obviously your mortgage payment, utilities, base rate of phone. This one kind of makes me laugh because no one has a home phone anymore. But if you do have a home phone, your base rate of phone can be included in there. Any furniture, decorating items, cleaning supplies, repairs and maintenance, insurance, taxes. Basically, your minister has to try to figure out how much he's spending on to provide his house annually, and that's how he comes up with that amount to tell the compensation committee to then get designated, to then get paid to him under that designation. So is housing allowance taxable? I kind of mentioned this earlier. I guess I was jumping the gun a little bit. But for federal income taxes, this amount can be excluded and is not taxable. Any amount that is claimed as additional income, any excess housing is claimed as additional income and included on the 1040. So what happens is when his tax return is prepared, and this is not the employer's job, this is his tax preparer, they go in and do a calculation to determine if what was designated as housing allowance was used for those purposes. And then there's a third threshold there that has to be met as well. And that's if it doesn't exceed the fair rental value of the home. So I don't remember what year it was. I was going to say 2001, but I could be wrong. They went and added this fair rental value threshold to this calculation because in order to make it more of a normal housing expense. They didn't want ministers to be able to get this huge tax-free income for big, extraneous, not normal expenses. They tried to normalize that by adding this fair rental value in here as a threshold. For self-employment tax, the full amount of the housing allowance is taxable. So he pays self-employment tax on all of his salary and all of his housing allowance, unless he's opted out with that 4361. We talked about that a couple slides ago. So it's taxed differently. See, there's a tax benefit here to designate a portion of their compensation as housing. And yes, up to 100% of their compensation can be designated as housing. The downside of that is if the thresholds aren't met, if he can't spend it on his house, then he ends up paying tax on it anyways, just as if it were salary. But that's not something that happens on the employer side. Once again, that's a calculation that is done on the tax preparer side by the minister's tax preparer to tax that correctly on the back side. So we have a little bit of a calculation here just so you can get a better understanding of how that calculation is done. So the IRS says that he can exclude from his income the lesser of how much was designated, how much he spent on his house, and the fair rental value plus utilities. So in this example here, he had $25,000 designated as housing allowance. His housing expenses were 30, so he spent more than he designated. Okay, and then his fair rental value is only 20. So even though 25,000 was designated as housing, only 20,000 of that ended up being excluded from federal income. So the excess of $5,000 gets included as federally taxable income. And that gets added back to basically the wage line on his 1040. However, he also will pay, she will also pay self-employment tax on the total amount that was designated, regardless of if it's used or not. Unless he's exempt from SE, he'll be paying self-employment tax on that total $25,000. So we have, as long as I've been working here, 2002 included this disclosure on the minister's tax return, just as an information item, because generally what the IRS sees doesn't even tell them that they're receiving housing allowance. And so if that's a very large portion of his compensation, his return may not look balanced. It may not make sense. For example, the itemized it up, he made, let's say he made $100,000. Well, 75,000 that was housing allowance. Well, his itemized deductions, so his charitable contributions, his property taxes, his mortgage interest, are like $50,000, and the return only shows that he made 25. Well, that looks kind of fishy. That's probably gonna get pulled by the IRS for audit. So we've never had one pulled by audit, or very, very rarely, if this statement is attached, which basically tells the IRS, there's income you don't know about, we're taxing it correctly, but these deductions really do make sense because there's income that you don't know about. It says the taxpayer receives a housing allowance pursuant to IRC section 107. To the extent allowed by law, the allowance is excluded from taxable income. Any excess housing allowance has been included in taxable income. The full amount of the housing allowance is included in self-employment income on Schedule SE. And obviously that last sentence gets left out if they're exempt from SE. But this statement alone tells the IRS there's income here you don't know about. So this isn't skewed. We're not over-reporting deductions, and that has helped avoid the audit from the IRS. So what if they're getting a parsonage? We don't see this very much anymore. Most places are going to where they're paying cash housing allowances to cover those expenses. But if they did receive a parsonage, they live in a church that live in a house that the church owns as a part of their compensation, we still have to add to his self-employment income the value of that house that's provided. We, the tax preparer, not we, the employer. But it would be beneficial and to his benefit for you to provide him with the value of the house that he's receiving. Otherwise, his tax preparer will just come asking for it, and then you'll have to get it later. So you might as well do it on the front end. So for federal tax purposes, the value is considered tax-free. So if you think about this, with the cash housing allowance, it's tax-free if we use it. So with the parsonage, the value of it, we're basically considering that we're using it. We're there, we're living in it, we're using the house 100%. So it's kind of like considering that his housing is totally used because there wasn't a cash piece given to him. So for federal tax purposes, the value of the parsonage is considered tax-free. For self-employment tax purposes, the value of the parsonage is taxable. I mentioned this a little bit earlier about housing allowance and whether you put it in box 14 of the W-2 or not. That's a preference item that is not necessarily required by law for it to be disclosed there. I have several employers who do not want the housing allowance to be on the W-2 because by putting it in box 14, even as an information item, you're providing the IRS with information they wouldn't necessarily need otherwise. And so they prefer to just provide a letter to their employees saying, okay, you received housing allowance of blah, 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 as opposed to it actually being on the W-2 that is filed with the IRS. But that's totally just a preference, one way or the other. Both are correct. Both are fine. I will say that if you use like QuickBooks payroll to process payroll and your housing is paid through the payroll, like when they process payroll, they get housing in that system, that's going to default to being box 14 as a disclosure item. So if you don't want it to be there, either you need to pay it not through the payroll system, or you have to get somebody to recreate your W-2s in a system where those numbers aren't there. We have a couple of employers where we take their numbers from QuickBooks payroll and put them in a separate software so that there's nothing in box 14, because they don't want that housing allowance in there. But that's totally just a preference, either direction. Neither one is right or wrong. We prefer it to be there because it's easy for, as a tax preparer, it's easy for us to know how much we got in housing allowance, but that's not required by the IRS. Okay, so after housing allowance, what other things are considered income? Allowances. After 2018, we are no longer allowed to give our new employees a moving allowance. We can't pay their moving expenses tax-free. So anything that you're paying to move your employees to the church is taxable to him and has to be added to their compensation. Auto allowances. Any allowance where you just give them a flat amount, $300 a month, $500 a month, to pay for their car and auto expenses without some type of substantiation, without any way that number is determined from anything after the initial kind of figuring out how much he needs, is considered taxable. It kind of goes along the same lines of accountable reimbursement plans in that if you give someone cash and they don't have to substantiate it, it's income to him. You're muted, Donnie. I saw your mouth muted. So that's taxable to him. A better option than giving an auto allowance, although it requires your minister to maintain more information, and that may not be a good option for you, is to consider giving them a mileage reimbursement. There's an IRS set rate, which changes all the time, and I don't honestly know what the 2021 rate is. Right around 50 cents, 51 cents, I think. And so they would just have to substantiate their business miles that they drove, and you would reimburse them for that. That's usually a better option. Number one, it doesn't increase his taxable income. Unless you're totally okay just giving him a flat amount to cover his car and considering it income. That would be totally fine. Yeah, that may be fine for you. You just have to determine what you're willing to deal with and what type of administrative burden you want to put on your minister. And if he was able to provide you with mileage to get it reimbursed. Clothing allowance is taxable for street clothes. That includes church attire. Allowance by itself, from my perspective, usually means we're not substantiating it. I mean, we're just giving you an amount to spend for a certain purpose, but we're not asking for receipts. We're not asking for anything on the back end. And that's generally a taxable event. Clothing allowance, street clothes cannot be purchased tax-free. You can't just go buy a new wardrobe for the church. However, if he's buying things that are specific to the church, like not just dressy attire, like clerical robes or anything in that sphere, that realm, he could easily get that reimbursed by the organization. Or you could provide him if he needs the cash, give him $100, he'll provide you back the receipt and the additional cash, just like you would any other type of cash advance. That's fine, but not streetwear. So not new church clothes, even not a new suit, that kind of thing. That's taxable. The SICA tax allowance. I'm seeing this more actually recently, which no real reason for that. But sometimes because our ministers, we are not paying the employer match for Social Security and Medicare. Sometimes I'm seeing churches that want to give that amount that they would have been paying as an employer match to the employee. It's just a bonus and it's taxable to him. So you can't do that tax-free, which is fine. I mean, it's still something to help them cover the tax, but it's taxable to them. You just have to know that on the front end going in, that those are taxable things to him. I think the other thing we see in the church world more than we see anywhere else is love gifts or love offerings. So anytime the church takes up a love offering for the pastor, it's taxable compensation to him. This includes if you had a reception for their anniversary and had a card basket or a money tree or anything like that where he's receiving gifts from the congregants. That's taxable to him. So if the church initiates the offering, if the church has the banquet, if the church has the reception, that's money to him from his employer. I do the accounting for my church as well, in addition to working at Somerville. And my pastor just hands me all his cards, and I just start going through them and figuring out what's taxable and what I have to add to his compensation. And that just covers him. And if I put it on his W-2, he doesn't have to worry about it. He doesn't have to think about it. And we provided the place or the avenue by which he's going to get additional gifts for his services. That's taxable to him. You can usually get away with it not being taxable if it's from a relative. I mean, like a birthday gift, you know, if I give my kids money for their birthday, that's not taxable to them. Same thing if the minister's mom gives him money. The church cannot be a conduit for members, and this gets a little tricky. A lot of times, if the church is taking up an offering, the church has already decided that they're going to pay that person. In this situation, we're talking about the minister, you know, his 10th anniversary, we're taking up an offering, or it's his birthday, we're taking up an offering. But in order for a contribution to be completed, as soon as that money is given to the church has control of those funds. So, and this kind of plays into that reasonable compensation thing that Donnie mentioned earlier. One of the ways that nonprofits get in a lot of trouble is when they pay the pastor an unreasonable amount for the work that he's doing. Obviously, we're talking about big churches where there's excess funds available. When you're starting, a lot of times you don't see that because you're just trying to pay him something, right? So we just have to be really careful not to have no limit on what we're paying our pastors. His compensation needs to be reasonable for his job, including all these love gifts that are coming in, including all the allowances, including the housing allowance. All that has to fit underneath what is considered reasonable compensation for him. So the key for a love gift to be non-taxable is actually detached and disinterested generosity. So if your relationship with the pastor is because he's your pastor and he ministered to you and he blessed you, by giving him a love gift, you're essentially paying him for that service. And as weird as that feels in the church world, that's what the IRS says. So we have to be super careful with that. It's very hard for a love gift to not be taxable if it's from a congregant. Like, it's really hard to look at that and not consider that some type of taxable compensation to him. Okay, so tax-free benefits, tax-free fringe benefits. What's left? Retirement plan contributions are tax-free. The church can give straight into his, straight into his retirement tax-free. Now that does still have to fall under reasonable compensation for him. Life insurance not to exceed $50,000 of coverage under a group plan is tax-free. Qualified tuition assistance plan, qualified dependent care plans, qualified tuition reduction plans. Qualified basically means that we have an IRS approved policy plan for that benefit. These are benefits that are provided to all employees. We're just mentioning them here in addition to what we're doing for the pastor. I do want to mention briefly here that anytime you're giving a extra benefit to the pastor, it's taxable to him. So for example, if you have a tuition assistance plan, and well, that more falls under child care. But if we have the church has a child care facility and all the employees get child care half off, but the pastor's kids go free, the additional portion that we're paying for him, or any of the ministers for that matter, is taxable to him. So we have to be really careful that we're not being discriminatory when we're providing benefits to our pastor, or any of the ministers for that matter. Anything that's an extra benefit to him is taxable to him. So we can have classes of employees that we give different benefits to, but that class cannot be just one person. Like, you shouldn't be able to name the person in the class. Like, all full-time employees get this benefit, but not just the senior pastor. If that makes sense. All right. Minister business expenses. Minister because the job of a minister is so broad and never ending, it's very easy to feel like everything they do is ministry and everything is business, with the same token, the same idea, the same plan there. But anything that we're going to reimburse our minister for, obviously we need to know what the business purpose is, how it relates to the ministry of the church or the program of the church, or his job as a minister. So here's a list of some things that we would consider to be a minister business expense that he could have reimbursed. Books and magazines for study, mileage, we kind of talked about a little bit. Mileage from your home to the church is never a business expense, just like mileage from your home to your other employment, not church employment, is also not a business expense. Where you choose to live and the distance that is from the church is your personal choice. That is not a choice that your employer made for you or forced for you. And so you're just stuck with the cost of that travel, if that makes sense. But from the church to a hospital or the store to pick stuff up, it gets a little confusing when we run errands on the way into church. But basically what you have to do to track that is keep track of your total miles and then just subtract what your normal commute is. So you drove 15 miles out of the way to drop something off, pick something up, go to someone's house, visit with them. And that additional mileage can be reimbursed at the IRS rate. Your church may choose to reimburse at a lesser rate, and that's fine, just based on what you're able to do. You cannot reimburse at a higher rate without it being taxable to the person you're paying. So any amount up to the IRS rate is totally fine. And that rate is supposed to include not just gas, but wear and tear on the car. There are other expenses that kind of go into that rate. So it really is a pretty much to your benefit to pay the mileage rate versus just paying gas, because gas is really, honestly, just one piece of that. The other thing that's kind of interesting or to think about, I guess, whenever you're paying gas, when you're filling up somebody's car, what's the chance that you're using 100% of that car for that business purpose, that church purpose? Unless you're traveling really far, that's really unlikely. And when you get done, you don't like siphon the gas out and save it for another member to use, right? So we got to think through that when we're filling up a whole tank of gas for a car. When you're traveling, it's a little different. Gas in a rental car is a business expense because you don't get the value of the excess, I guess I should say. That's not used. That's fine. Office supplies, conference fees, some educational expenses. You have to be a little careful here. And those rules kind of change often. Travel expense, cell phones. The IRS said a couple of years ago, actually, that cell phones can be considered a business expense. You need to substantiate how much of your cell phone is a business expense. For example, look at 1 month, a cell phone bill for a month, and look through your calls and see how much of your time is spent really doing ministry, church, business things. And then use that percentage to determine how much you're going to pay for the cell phone. I mean, there's inherently some personal piece in that cell phone, unless you have separate cell phones, which Dondi's husband does have separate cell phones. He has a business phone and a personal phone. But most of the time, people are just going to use their normal cell phone. So just do it with caution. Have some type of reasonable method or reasonable way to determine what you're paying for that cell phone before you just flat out reimburse it. Accountable expense reimbursement plans. I failed to mention this, but in 2018 as well, a deduction for employee business expenses disappeared on the 1040. So that's not an option anymore. You can't just keep receipts of what you paid for your employer, the church, and not ever get them reimbursed and then take a deduction on your tax return. People used to try to do that, which according to the law, if they were able to get reimbursed and they didn't, they really weren't allowed to take a deduction for that, just because they chose not to. But in 2018, that went away totally. So there's not even a deduction for employee business expenses available anywhere. So the best way to take care of your ministers is to go through an accountable expense reimbursement plan, which means you provide the receipts, and on it is documented. What's the date of the expense? What's the purpose of the expense? Why do we need to reimburse this to you? Within a reasonable time, and then your employer, the church, reimburses the minister for those expenses, assuming they are valid business expenses. That usually doesn't happen within a reasonable time frame. This says 60 days or so of expense, which that falls right in line with the credit card policy that Donnie was talking about earlier. That 60 days in there. Any cash advances are fully documented with excess cash returned. And then receipts are required for all lodging, meals of $75 or more. Remember we talked about, or Donnie talked about, if they're not substantiating the credit card expenses, that's personal, that's compensation to them within 60 days. And I will tell you, in all reality, generally people try to make that whole by the end of the year. I mean, 60 days is a great plan, and that's what the IRS recommends. But before I'm issuing your W-2, you better have these receipts to me or it's going on your W-2 as personal expenses. So we just need to document personal expenses. Ministers do have a lot of out of pocket that they don't really tell anybody about. And that's fine. You just can't expect to then get a deduction for federal tax purposes anymore. You can reduce your self-employment earnings by unreimbursed business expenses, but not your federal tax earnings, because that deduction kind of went away. All right. Netting arrangements. So non-accountable expense reimbursement plans is basically a plan where no one has to account for anything. Hence the name non-accountable. We don't have to really provide receipts to you. Oh yeah, I think I spent $20 eating out with whoever the other day. Not a good option. So a plan that is not timely carried out is also not a good option. We don't want these expenses hanging on forever. We don't want you having a shoebox you bring me at the end of the year of everything you never got reimbursed for. Not only is that not business practice, it's super inconvenient for your administrator, the church administrator, who's trying to finish year-end stuff, and now they have all these receipts to go through. It needs to be timely carried out. We need to account for expenses. I understand that sometimes you have to pay for something personally and get it reimbursed, and that's fine. You just need a method to do that. It needs to be organized. It needs to be accounted for, those expenses, and not just however. Let's talk about this netting arrangement. So I've seen a couple times, and actually I have one employer that I work with regularly who does this. They provide him a certain amount of money every year, every month. And within that, basically they've told him, so provide us business receipts, and whatever you have receipts for as a valid reimbursement, the rest of it you can keep. The rest of it is your compensation. And that's great in theory, but what the IRS says is if that's the plan, it's a netting arrangement, he just gets to keep the rest of the cash that he didn't substantiate for. All of the entire portion given to him is taxable. That's what the IRS has said. So we can't do this kind of weird half done. Oh, here's some cash. Why don't you just, we only want to spend $5,000 on you, Pastor, but if you can give me receipts, then we'll decrease your taxable income. You can't do that. That netting arrangement does not work. It makes all of that entire $5,000 is taxable to him. So it really doesn't matter if he provides receipts or not, because it's all taxable because of the way the plan was set up. But if you can set it up better so that it's more of a reimbursement plan and not a netting arrangement, then you do better. Your pastor's taxable income is less. It's just a better all-around deal for your ministers and your pastors. So all of that in the netting arrangement is taxable to him. Same thing I just said. All accountable expense reimbursements are added into box 1. And no deductions are allowed on the personal tax return for those. So that's all I have. Do we have any specific questions on minister's tax before we do open questions on other stuff? Scott, how do you want to facilitate that?
Oh, let's see, I got it.
Well, this is the same book that Dondi referred to earlier. It's Elaine's competition.
Well,
Okay, a couple of questions I have. Are y'all taking questions now? Did I get that right?
Yes. It's probably easier if we do minister's tax first, but we can mix it all together. We don't really care.
Okay, so when we talked about the tax for the minister, the housing, it's
Okay.
the employer's responsibility, correct, to determine whether or not what they're giving you is correct or not.
No. Are you talking about when they give you like what they think their expenses are
Right. They
on the front end?
like an itemized list. They give a total for what they need for the annual. We send it to the committee to be approved.
Yeah, generally we let them say what they're going to say. Now, if it looks obviously large to you, they would say, do you really have expenses for these? Because the backside where it's actually calculated how much is taxable, that's on them and their personal tax preparer. That is not on you at all.
Right.
And by doing that, you kind of increase your liability if you put yourself in that calculation place.
Right.
So generally we can just go with what they say. Obviously, if it looks really weird, I may say, hey, kind of on a personal note, do you really have expenses for all this? Because the downside is if they overclaim housing, most of the payroll systems are set up such that even with a W-4 status of some type that's calculating tax, it won't calculate that based on housing allowance. So you're not even having federal tax withheld out of that housing allowance at all. So if a portion of it ends up being taxable, on the back end, they owe more money that they weren't expecting. So I think it's important to make sure they understand how that calculation is done, but not necessarily totally handhold them through the amounts they're giving you. Does that make sense?
Yes. Uh-huh.
I had one question, Tammy, if it's okay to jump in. This is Donna. Sandra, so the thing that was a little confusing to me about all that housing, it said you walked us through that example where it was limited to the fair rental value of the home.
Yes.
But the things that are allowed as valid expenses included a lot more than you would pay for rent, like cleaning supplies and,
Well, and I didn't define that fair rental value very clearly for you, so I'm sorry for that. The IRS definition of that fair rental value includes furnishings. So fair rental value of the house furnished plus utilities. So we have found that the minister can work as hard or as little as he wants to get that fair rental value up high enough that it would cover what his expenses are.
Okay.
Does that make sense? I have a client who nickel and dimed every piece of furniture in her house and got monthly rental values, and her fair rental value was huge, but then she didn't ever have to worry about having excess based on that number.
Mm-hmm.
So they can work to make that number higher, especially because there's availability in there to include the furnishings. I mean, how much does it cost to furnish a 4-bedroom house to rent it, So that kind of gives you some leeway in there and helps with that.
Yeah, that makes sense. Okay, thanks.
Sorry, I didn't define that very well.
And that fair rental value came out of the Rick Warren case. The IRS agent decided that Rick Warren shouldn't be allowed to take 100% of his church salary. He had no idea who Rick Warren was, and that he lives off his book royalties. And so Congress went to make an act real quick to stop kind of that case from going further. And so fair rental value had just kind of been a gentleman's agreement up until then. But really what it's there for is to keep the minister from, putting in a pool and trying to claim that as 100% tax exempt. So like Sandra was saying, is if you really look at what your property rents for a month, add in all the furniture you have in your house, add up your utilities, that number should be more than or comparable to what your annual housing costs are. But we see, I have one minister who always would want that housing allowance higher, and then they would never spend it. And then every year we do his return and he goes, why do I owe money? And I'm like, because you didn't spend your housing on housing. You have to spend it on housing. It's a pretty flexible definition. You get to count up your cleaning supplies and things like that. Furniture, decor, you get to add all of that in. The other question that we get a lot, and I'm just going to offer this up, is we'll have ministers who get their entire house exempt and then want to take an office deduction because they use their office in the house. Well, when the whole house is already exempt, you can't also exempt the office. So if you're not getting a housing allowance, then you might talk to your tax preparer at taking the home office deduction. But you can't take a home office deduction when the whole house has already been exempted from income.
Well, and the issue is the expenses. Like if you had housing expenses that exceeded your housing allowance by, I don't know, $5,000, you would then have $5,000 of expenses potentially to put in the home office. Does that make sense? But you can't use the same expenses in both places. The only place they allow that, which is kind of interesting, I don't really know why, but in theory, you can get housing allowance and you can also itemize and take your property taxes and your mortgage interest on Schedule A also. So that's kind of a double dipping. That's the only place where they let you do that on the 1040.
My tax guide did encourage me to keep it, the housing allowance high enough such that if I ever need a new roof, that it gets covered. But I do, and I have to put out extra money for something big like that. But that I also do plan to pay taxes most years on that extra money, that is not used for housing. Yeah.
Well, and the housing allowance can be, designation can be redone as often as your employer will let you. I mean, you could redo it mid-year and change that amount, or even every year. You wouldn't necessarily need it every year if you didn't know big things were coming. But you can change that. I mean, it's not really a bonus. We're not increasing compensation. We're just putting the same money in different buckets.
Right.
I thought it was an annual designation. You can change it mid-year?
You can, but you cannot change the cash that's already been paid to you.
Okay.
So it has to be designated before it's paid. So if we change in the middle of the year to be higher, then more of your compensation from then until whenever you change it again would be housing. But you can't go back to what's already been paid and change how that was designated. Does that make sense?
Yes. Thank you.
And I think that's a big area with new ministers that we see. To me, is one of the biggest travesties is people tell them, hey, your income's tax exempt, it's tax exempt, and they don't understand what Sandra was talking about, the difference in your income tax versus your self-employment tax. And so even if all of your compensation was housing allowance, you still need to plan that 15.3% tax on that self-employment part of that. And so that's part of the reason we do what we do, is to try and keep people from falling into that hole, because by the time you find out you owe the IRS money, it's 18 months down the line, and then you spend 3 years trying to catch up with the IRS, and very frustrating. And you're already a minister's family. You feel like you're there to further the gospel of Jesus, and then the tax the tax bill comes for that. So
I do see a question in the chat. If no one else has a question, I'll address that one. Maggie said, we pay directly to Guystone for the pastor and his wife's accidental death and dismemberment and life insurance. Is that taxable income for him? It depends who the beneficiary of those policies are. So if the life insurance and the AD&D are to the benefit of his spouse, then yes, that's taxable to him. Sometimes we see life insurance, like key man life insurance, where the beneficiary is the organization, and that's not taxable. That's the only time. That, and if you have a group life insurance plan with the $50,000 limit, where it would not be taxable. But generally, disability and life insurance is taxable.
Any other questions? Donna, I see you're still not on mute. Or did you have another question?
I was waiting to see if Tammy had more. I thought she said she had a couple.
I have one more. On box 14, when we talked about that you don't have to put the housing there. I mean, we kind of put that there as a convenience so they'll know, and have that. But is it optional for the employee to say, you know, I don't want that in box 14, or just as an employer, that's just our practice?
Well, that's interesting. I would guess you could give the employees the option, but that would be up to you. That may make it more difficult if you have some employees in there and some employees not. I mean, I kind of see the people who've chosen not to put it there are just afraid of the IRS having more information than they need. So I can see that as a benefit. I'm just also the tax preparer, and it's easy for me to find the number there. So.
And ACS, you know, gives us the option to tell it what needs to go in box 14. So, I mean, box 14. So, okay.
Okay. So my question was about business expenses.
Okay.
And what we did for this past year is we set a certain limit. You know, we're going to reimburse you for your expenses that you turn in receipts for, but up to a certain amount. And, you know, there was no up to a certain amount beyond, you know, we're going to go ahead and give you the rest or anything like that. So I know, you know, it's a accountable reimbursement plan, but the rules around exactly what is allowed for that person, for the minister to turn in as expenses seems a little, you know, I mean, you gave us a pretty good list, but there's a lot more to, you know, a lot more things that would come up. An example would be one of ours wanted, you know, to turn in a receipt for dry cleaning for their clothes for the church. It kind of seems like it's probably not. Is there a publication that tells you a more comprehensive list?
Business expenses, I can't think of one off the top of my head, but let me make a note. We're talking about for ministers.
Mm-hmm.
I would bet there's something in Elaine's book.
That's what I was gonna say. I'd go to Elaine's book. And then one of the links I had on the other handout is to the Guidestone Minister's Tax Guide. So there may be, I know there are some blank worksheets in that Minister's Tax Guide, and it is a free download. If your church is is working with Guidestone, you could call and get one sent to you, but I put in there how to get it downloaded. There's probably something in there. But yeah, in general, the dry cleaning thing, because it's personal clothing, that should be taxable. You could still, and Sandra was going through things, you can still pay for these things for your minister. They're just taxable compensation. You don't get to pay for it, and they don't have to pay taxes on it. And you know, in my 20 years, I've seen ministers who have the church pays for the cleaning lady to come every 2 weeks. And they can do that, but it's taxable income. You know.
Well, and the other thing I wanted to address, just kind of in your question, there's no problem with limiting the amount that you will reimburse them during the year for business expenses, just kind of as a budgeting item. Okay, we'll reimburse you up to whatever, $2,000 a year, whatever. There's nothing wrong with that, providing a limit on the top end. The issue is when you give them all the cash and don't expect them to either return the cash or provide substantiation for the use of the cash. The budget side's totally fine.
Okay.
And I think the tax code talks specifically about, what's the wording I'm missing? Business expenses, qualifying business expenses. I think those are the words. And so, you know, think of it outside of the church and like a secular, I work for a CPA firm. Elaine's not going to pay me to buy the right clothes to meet with my clients. I'm expected to clean my own clothes, and I'm expected to purchase my own clothes. But she pays for my professional certifications. And so that's a business expense for a CPA firm. So I think if you kind of look at it that way, with what pastors needing to get reimbursed, is it, you know, in a secular organization, would they pay for this?
Okay.
That's
I think a good guide to go with.
Yeah. That's good.
And I think ministers in churches, we're a lot more generous to our ministers than a non-church employer is to their employees. So I think that's why we have to think through this better. Oh yeah, I'll help you do that. But like Donnie said, if it was a secular employer, would that even be an option? Would that even be on the table? Because that kind of tells you if it's a really personal expense. or a business expense. There's another question in the chat if nobody else has one.
Mileage
question-
allowance
I'm sorry?
on mileage allowance. Do they have to validate like using Google Maps or anything like that? Or can they just put 15 miles hospital visits?
I would probably have them validate it.
Okay.
I mean, it's better to have more documentation than not enough. If the IRS were to come in and see it, what would they want to see why is this not compensation to them? You know what I mean?
Right.
There was another question that said, if the church is paying you a small amount of salary, for example, $200 every 2 weeks, will this be taxable? Yes. There's not a de minimis or a minimum before employee wages are taxable.
Unless it's designated as housing allowance.
Yeah, if it's designated as housing allowance.
Then you're calling me on DBA Tax Services.
Then that would be nothing recorded him, and you may give him a letter that says, hey, we gave you this much in housing allowance, which is actually a pretty smart idea if you're paying them a really small amount. Except for the fact that they would still have to pay self-employment tax on that. Are they paying attention enough to realize, oh, I owe 15% on this, 15.3% on this?
And if the church pays that percentage, or at least the church's percentage, that's just wages. That's additional.
Correct.
Right.
Correct.
Box
So we
one.
see that quite a bit, actually.
Yes.
Yeah. We just give them a bonus to cover the 7.65%.
Yeah.
Basically.
Yeah.
And that determination is totally just something you do in-house. I had somebody who was concerned that the IRS would notice that the amount was not matching with the wages, like in the time frame. And I'm like, it doesn't matter. That's how you determine the amount. The IRS doesn't care how you determine that amount. You're just giving them a bonus basically.
It's just other income as far as the IRS is concerned.
Yeah.
Other taxable income.
Brother Tedrick, did that answer your question sufficiently about the smaller sum that a church might be paying? Brother Tedrick's bivocational, and so his church is probably not paying him a whole lot. That's not the primary source of your income.
Right. Yeah, it answered my question. Then I have some more questions, but I'm trying to work at the same time. So I think it'd be a good thing that I can just give them a call and talk to them and see what type
And
of
I think
service
our
they
phone
offer.
number in the back too, Don D, or just our email. Either way.
Okay. Thank you. Thank
Yeah.
you for answering my question. Thank you.
Yeah, our numbers. And our website is nonprofit-tax.com. I think it was on the front of that first handout, nonprofit-tax.com. So if you go there up in I think it's the upper right-hand corner, there's some resources. And so there's some links that go to other places, but also Elaine Somerville has a blog. And so I know in March of 2013, there's a really good post about raffles in the state of Texas. Very easy to do that illegally, very hard to do it legally. So that's a good post if you guys decide to have a raffle for some reason. And then she also did a 7-part series on ministers' compensation. As you're beginning to pay ministers and trying to develop, that would be a good blog post. But there's some resources there on our website, and you can obviously find our phone number there as well.
Okay. Okay, anybody else have a question that they want to ask?
I have a question, but not about ministers. I have another question. So when y'all get ready to do that, I'll do that.
I think we can switch over unless there's some more ministers.
We just talked about the hotel occupancy tax. And on our letter from Texas Comptroller of Public Accounts, it's dated 2014, but it says, what we're exempt from: franchise tax, sales and use tax. But then it says this entity is not exempt from hotel occupancy tax. Something changed over the years, or do I need to contact them and ask them why? Or, I have just.
Yeah, I would contact them and ask them why. Because you should, I would assume you have church status under the Southern Baptist churches. And so you should be designated as a religious organization and have that hotel exemption. It may have been as simple as someone didn't apply for your exemption as a religious organization. And so it didn't get get exempted. But yeah, definitely worth the call to the comptroller. If you go to hotels in Texas quite a bit, I would think you probably would.
We don't a lot, but sometimes some of our consultants do. They go to a conference or something, and yeah, they do.
Yeah. So yeah, you'll just have to weigh the cost benefit of dealing with the comptroller's office versus how much you'd actually save having that form ability, the ability to use that form. I'm always like, it's a cost benefit. How much time is it going to take me to get that little bit of extra information? One of the questions I get a lot are about IRS mileage, and we kind of touched on mileage. So just to clarify, if you don't want it included in an employee's taxable compensation, it needs to follow that accountable reimbursement plan where they are submitting a log or the Google Maps or something. They have to have some documentation or substantiation. But every year the IRS sets their mileage rates. And the question I get a lot that confuses people is if you look up the IRS mileage rates, they give you a charitable rate and they give you a business rate. So the business rate is what you're allowed to reimburse to your employees for church business without including it in taxable compensation. And as Sandra hit on, that's not just fuel. It's also repairs, wear and tear. They have big time math people figuring this number out every year. The charitable rate is what your volunteers are allowed to deduct on their personal return. So in the 4th grade, the school district my kids are in, we go to Austin and they get to tour Austin. And so I drove my personal vehicle on a school field trip to and from Austin. I wrote that mileage off with that charitable rate. So just because you're a charity doesn't mean you have to go with the ridiculously low rate of like 14 cents. If your employee is doing church business, then you're allowed to reimburse up to that business rate, which is in the mid 50s. I think it's 56 cents this year.
2021, it's 56 cents a mile.
Okay. And so the other side of that is I had a new client that was reimbursing like at 60 cents. And I said, you realize that's higher than the IRS rate? And she was like, yeah, no big deal. And I said, that means 4 cents of everywhere you drive, I have to put on your W-2. She was like, oh no, I don't want to do that. And so if you reimburse over that rate, it is taxable. There are also, for those that travel a lot, per diems. So if you'd rather look up the IRS per diem for wherever you're going, then I believe you don't have to substantiate that as long as you're paying the IRS per diem. So that's another option. I didn't really hit on it here because I didn't think it was really relevant, but just FYI, that's another thing to look into on the IRS website. But if you're we see this a lot, we're just going to fill up the tank of gas, and Sandra kind of mentioned that. So if you're putting gas in a personal vehicle, that's taxable. You really need to go with the mileage rate if you don't want to have to pay taxes on that.
Now, what I've done after the fact to fix some things is we paid gas for somebody and then we figured out how many miles they drove and figured out what the reimbursement would have been for the miles. And the reimbursement would have been more than the gas. So I kind of substantiated that. Does that make sense? We paid them less than we would have if he would have submitted the miles. So we substantiated that, kind of offset that and said, okay, this is fine. Don't do this again. But if we would have reimbursed them for that travel, it would have been more than what we paid them. Does that make sense? So I kind of substantiated that gas, but it's still not easy to do that. So don't start on the phone. Reimbursing is much easier.
And then I know a lot of you are small churches, and so you're probably paying for things out of pocket. And we talked a lot about getting your expenses reimbursed. That IRS publication 1771 talks about giving donor credit if they turn in receipts. So if you're paying for things out of pocket and you don't want to ask the church to reimburse it because you guys have low funds, you're just a small church trying to make ends meet, you really kind of do a disservice by not including that information in your financials and just covering it out of pocket. So one of the things I would suggest is look at that publication and see about turning your receipts in as donations to the organization, so that the church isn't reimbursing that. So that's what you were wanting, but then you get an accurate financial picture of what it costs to run the church. If you're paying for Wednesday night suppers or counseling meals or encouragement times or fellowship or whatever, and it's not going through the church books and records, when you go to do the budget the next year, all that information is missing. So I would strongly recommend that if you don't want to actually reimburse it, don't just not record it. Look at it being a donation to the organization. Then you get that credit on your 1040, and the church knows what it actually cost it to run, and that gives you a better idea for budgeting the next year. But that publication 1771 will talk about how to do the written acknowledgement when you turn in receipts that you covered personally.
So the written acknowledgement comes from the church to that
Correct.
person. Okay.
Correct.
Dondi, because you have the receipts, do you actually put an amount on that? On that receipt?
You know, I don't remember off the top of my head.
I think we have, but I had the receipt of what they physically spent.
Yeah.
It wasn't me making a judgment call as to how much something was valued.
Right.
I usually just stapled the receipt to the letter.
Yeah, that works too.
And that's what I was going to say.
Letter, and I
Is
just
get into sales tax or not? You know, do I value it at what the subtotal was or the total out of pocket? And so that's what I would do as well, is thank you for your supplies from Dollar Tree, and attach a copy of the receipt for them. Now, again, as far as the donor side, this isn't for the organization, but the donor side, they only need that written acknowledgement if they spent more than $250. So when I was PTA president and I was buying a whole bunch of supplies, sometimes I would just put my receipt in my tax thing. You know, it'd come out $20, $30, or I'd have something sent to the school via Amazon, and I'd print my receipt and just put on there which organization it was and what the purpose was. And if it's less than $250, I don't have to have that acknowledgement. If you're doing charity business, you can keep that for your tax return. But that's between you and your tax preparer. I'm not your tax preparer, and I'm not giving you tax advice. Just saying, keep your receipts and consider that when it's time to file your return. Then anybody else have any more questions on anything? We've got a few more minutes. I got a whole list of stuff I can keep talking about till noon, but if somebody's got a specific question, I'd rather answer it.
I have a wage and hour question. So I have an hourly employee that goes on a mission trip or a youth camp. They're an hourly employee. I've been paying them for their travel time and for the time they're actually in an event, whether it's you know, they're on the job site, you know, doing a reconstruction or whatever, it's a mission trip, and or if they're at a youth camp, you know, they're leading a Bible study or they're actually supervising kids, but I don't consider them working while they're sleeping or, you know, getting ready or eating. So I just want to know if that's good. Should I be paying them for the whole time they're gone, or just for the time they're actually working and their travel time?
Really complicated. I just had my, in September, I studied to become a certified payroll provider, which is a very big fat book of payroll laws, and it's very complicated. I will look it up and let you know. I don't remember off the top of my head. It's been a couple of months. I know that there are rules regarding travel time that's not in your normal hourly working schedule. So like if you traveled over the weekend, that's not technically work time, which is kind of an interesting thing. But anyways, I will look that up. What'd you say? Child, like missions? Is it generally missions work?
It's usually missions work and or youth camps. I have an hourly person that goes on both of those.
I'll look and see what I'm sure DLO says, because that's who it.
And that's what you're doing is very similar to when I was an auditor. So when I was traveling to or from the client, especially out of town, that time was billable and maybe not charged at my full rate, but there was a travel rate. And then and then when I was at the hotel, you know, my at the hotel, my downtime was not, I was not paid for that. I was paid for the time I was at the clients and the travel to and from the clients each day. So I think you're in line. I mean, Sandra's obviously going to look it up and give you a more detailed answer, but I think for right now, you're following things pretty well. I would say since they're hourly, they do still need to be turning in time sheets.
Yeah, I have fill out a time sheet and document, start, end time, start, end time.
Dan, can you email me your question? Just so I have an email I can reply to.
Yes, yeah.
And then that'll be easier for me.
Okay, thank you, Sandra.
There's a question.
Yeah, I have a question on the hotel reimbursement. If not tax exempt, if you have to buy, reserve your hotel online, how do you get that in?
I don't think you can do
Then
it
the second
online.
question will be, do we have any on the airlines?
No, to mine, because that's not a state thing, and these are all state exemptions.
Okay.
So as far as the hotel, I don't think you can. You just have to pay for it online, but you might ask the hotel if they'll reimburse it. They may give you a refund for that amount. Just the same as if you paid sales tax and went back to your vendor with the certificate and they refunded the sales tax later. I think a lot of that'll depend too, though, if you're booking with the hotel directly online or if you're going through like an Expedia or a other discount site, then I don't know that they're getting the sales tax. So you probably would just have to take that into account as less discount that you're going to get.
Okay.
There used to be a hotel occupancy form that you would fill out and sign and give to them. So I don't know if that's still valid or not. But
That would be in person, right? That would be hard to do online.
unless they gave you a way to send it to them electronically.
Mhm.
And then, Sandra, did you see the question in the chats?
Yeah, I was going to address that. The question in the chat is, what are the healthcare reporting requirements for a church? I'm guessing you're talking about like the W-2 disclosure requirements. Those are not required under employees for organizations with less than 250 employees. So when was that? A couple of years ago?
Yeah, it was
There's a
ACA.
requirement, there's a requirement to disclose the employer cost of the health insurance for the employee, but you have to have more than 250 or more employees before that hits you. So that doesn't hit me and any of the people I do payroll for most of the time. In most small churches, that would be fine. As far as pre-tax qualifications, it changes your taxable income like it would anybody else for box 1, 3, and 5, but not the disclosure isn't required until more than 250 employees. And they were, at one point, they were trying to phase in the small businesses, but I never saw it change after the 250 number. Like it was supposed to decrease over time, but I think they gave that up.
I think that's one of the things Trump reprieved in his tax act.
Yeah.
Was they left it for the 250, but they didn't actually phase it in. The other thing with, it's not really reporting, but healthcare, you need to make sure if you have more than one employee, I think that's still the case, more than one employee, you're on a group plan that is Affordable Care Act compliant. And so if you're using Guidestone, they're good. If you've only got one employee, go with Guidestone. They can get you into their church plan. I can say that because you're DBA. So my husband works for Guidestone, so I usually disclose that. I'm like, don't go just because I told you, but you guys are DBA, so go to Guidestone and talk to them. They have some options for health insurance plans. And if you go with something that's not true insurance, like I think Christian Brotherhood has a medical share,
Medishare, healthcare sharing.
They've gone out of their way to make sure they are not insurance, which means they are taxable compensation if the church is paying for Medishare or any other kind of medical sharing plan for the employees. Again, you can still do it, just make sure it's getting included in box 1 of the wages and not getting passed over as health insurance because they've gone out of their way to make sure they are not insurance. That said, I have 2 or 3 churches who have chosen that's the best plan for them, and they are doing that. So I truly have no recommendations whatsoever. I think every church and every nonprofit's different. I get asked a lot of times what one accounting package would I suggest, and I'm like, I don't. I want a 5 or 10 minute conversation to find out what your needs are and what other software and apps you're using, and then we'll find one that fits you right. And I think health insurance is the same way. You need to visit 2 or 3. Some of the bigger churches that can afford it have gone with really high deductible plans, and they've integrated with an HRA, a health reimbursement policy. Other ones, like I said, I have some one-man shows that are going with Guidestone because they can get into their church plan and get the benefits of multiple people in a plan with only one employee. So there's lots of options out there.
So is there a requirement for churches that have employees that we have to offer healthcare?
I don't think so.
Okay.
Yeah.
I just was kind of reading into what you were saying. I wanted to make sure I wasn't reading the wrong thing in there.
No, there's not a requirement to offer it. If you offer it, it needs to be non-discriminatory. So it can't be top heavy. And that's what Sandra was talking about. It can't, when you have to have different classes of employees, senior pastor can't be a class all by himself. You got to have minister class, you got to have full-time class, you have to have part-time class. And that class gets offered the same benefits. So we want to keep it fair. We want to keep it balanced. I don't know what the right word is there, but that's
non-discriminatory.
what you gotta look at if you're offering it. Anybody else? So the only other thing I have on my list that we didn't touch on today would be private inurement. And that's kind of a hard concept, but broken down into English, no one person, no one individual should benefit from their relationship with a charity. That gets very bad. If IRS finds that, you will lose your tax exempt status. The board will be held fiduciarily responsible. Dogs and cats living together are really bad. So just keep that in mind when you're developing your policies and your controls. No one should be allowed to benefit from their relationship with the church. And so if you are benefiting from the relationship with the church, it should be in a compensation relationship, such as pastor providing services and receiving a wage for that. And so Sandra, do you have any great examples off the top of your head?
Not really. I just know that's why the whole purpose of reasonable compensation is to avoid that. So basically you determine compensation based on compensation in similar organizations with similar sizes for your key people to make sure that we're not paying them excess. That would then go into potentially being private inurement. So that's what the purpose of those compensation surveys are, to see what normal is within your organization.
Right. And so Elaine likes to say movers, shakers, and decision makers. So if your movers, shakers, and decision makers are benefiting from their relationship with the organization, that goes back to the conflict of interest policy, it goes back to unreasonable compensation. Just be mindful of that. That's the point. You want to reach out to a nonprofit attorney or a CPA firm that works with ministers and talk about situation is and get the right help. And I'm sure DBA probably also, you guys have great resources to help talk smaller churches through that policy setting procedure.
Yeah, that
Okay.
kind of reminded me of the question about that conflict of interest policy. Do you have a good, and it's sort of the same topic, but slightly different. Do you have a good example of that? Like what kinds of conflict of interest is it talking about that we needed a policy?
I think in general, contracts is what comes to my mind. If you're going to have a repairman or a major construction project, obviously a lot of times churches like to hire members or board members, and so obviously if John Smith owns a construction company, is on your finance team, he probably should be abstaining from voting on whether or not to hire him as the construction company. Okay. That's kind of the most obvious. I think what happens is a lot of times I see smaller churches go to an attorney to help them get their governing documents set up. And so they create this conflict of interest for churches, and then they never know it exists. And so I'll ask churches, do you have a conflict of interest? And they tell me no. And then they send me their governing documents and they have this conflict of interest policy. And I'm like, yeah, you do, but clearly you're not monitoring it. So monitoring that plan is also part of that process. So your movers, shakers, and decision makers should be annually asked in a meeting if they have any potential conflicts of interest, and documented when they all say no, or if there are some. So my church, I'm on the finance committee, and I had we were voting in raises recommended by the personnel committee, and I had one of the ministers want to be noted as abstaining from the vote because he doesn't want to be voting for his own raise. So that's the kind of, that's kind of more detailed. But I think more when you're going with a new insurance company, any kind of contracts that the church is entering into, that's the time to question. Because again, you want to go with your congregation members. You want to go with those that are supporting your ministry and part of the exempt purpose. But you also have to maintain that arm's length. And sometimes you get a better deal by going with the membership. But again, they shouldn't be the ones voting on whether or not to handle that contract.
Okay, yeah, that makes perfect sense. Thanks.
And the IRS, so the form, churches don't file this information return, but every other ministry does. It's a Form 990. And I think it's, and Sandra, you could tell me, I think it's page number 15 on page 6, isn't it? That talks about how compensation is set and the different policies. Anyway, if you'll look at the instructions to the 990 for that particular question, they lay out exactly what should be in a conflict of interest policy. They want you to say on Schedule O, this is what our policy says. So, it's basically where our questions came from in the handout. We know what the IRS wants to see in your conflict of interest policy, and so therefore that's a best business practice to follow.
Okay. Any other questions? Tammy, I see you're unmuted.
Well, I just wanted to say, you talked before about the Church Network Conference in the summertime. Will your firm continue to do the ultimate, and is there plans for that, legal and?
It's not going away. I don't know that it's going to happen in 2021. We're in that planning process right now, and they have to make that decision this month. So ask me again in April. We'll know what's going on.
To everybody, if they do that, so y'all will know the location and have the option to attend if you choose to.
Yeah, if you just Google Ultimate Financial and Legal Conference, there used to be, I think it's still up, a place where you can put your email in for the notifications, or if you'll email me or Sandra that you want to be on that list, we'll forward it to the person in our firm that maintains that list. We'll be glad to get you guys on that list. It really is. It's a 2-day conference. It's traditionally held in Arlington. It's the 4th Monday of October is traditionally when we've held it. And we have legal sessions, we have fundraising sessions, we have accounting sessions, audit, tax. It really is just everything legal and financial. And it's fabulous if you have new board members who've never worked with nonprofits that maybe don't understand the additional regulatory requirements of maintaining an exempt organization. And it is tailored for religious organizations and churches. I don't know of another one that exists that is so narrowly niched for governing and accounting specific to religious entities. But I'm biased, so it's not like I've gone and looked for another one either. The Church Network is probably the closest one, and it's a lot bigger, and it travels around the United States. It's in Minneapolis this year. And to my knowledge, it's in person. Frank and Elaine are usually there, but I haven't asked her if they're going this year or not. That's probably way more information than you ever wanted, Tammy. But thank you for asking about that. And it really is a fabulous conference.
I have benefited greatly from that. So that's why I want to make sure everybody knows they have that opportunity.
The pretty good on time. We're like
Right at noon, yeah. So, well, thank you guys so much for your great questions and all your attention. We truly appreciate, again, the opportunity to serve your churches, even if it's just this little bit of time. Feel free to email Sandra payroll questions and both of us any other policy governing questions. Well,
yeah.
Yeah, whatever else we can help with, let us know.
Yeah, how great. Thanks. And y'all kind of went out of your way to, we had to reschedule because of the ice and such. So y'all kind of had to plan it twice. So thank you very much.
No, it worked out well because I ended up with no power exactly the time that we would have supposed to been meeting. And so, yeah, Tammy would have been doing like hand puppets or maybe reading from the minister's tax guide or something. It would not have been nearly as good because Sandra was already without power. And that's what I told Tammy. I said, well, right now we're putting Sandra on the speakerphone of my cell phone and I'll do the Vanna White stuff. So I said, much better if we postpone and try to do it in March when people have power again. So thank you guys for rescheduling. I'm glad that worked out.
Yeah. Well, thank you.
Guys. We appreciate it.
Yeah, thanks a lot, y'all.